All right, this is day 2 here at the Real Symposium in Boca Raton. If you don't know what this is or why I'm here, who I am in the first place, which I wouldn't blame you for, but it just means that you've missed 2 previous episodes, and that I will blame you for because it actually does hurt my feelings. Previous 2 episodes were day 1 was really all about interviewing all the company, all the guests, all the talking heads, all the experts that were around here. Asking them a bunch of questions. Day 1 was all about getting everyone's feedback on, or day 0, I suppose you could say, was getting everyone's feedback. Like, what did you think of this conference? What would you grade it on a scale of 1 to 10? So those are the 2 previous episodes. If you missed those, please do catch up on them. Day 2, 3, and 4 really are going to be all about talking to the companies. I want to talk to as many companies as possible. I haven't scheduled any interviews though, so the idea is to kind of ambush them. So I hope at least a few companies will speak to me. They're not paying me to do this. They've no idea I'm coming, so I didn't tell them. Again, I hope they're going to want to talk to me. The idea is basically to ask them 3 groups of questions. The first group is going to be all about the people. So why should I trust you with my money? What have you done in the past? Skin in the game, that type of stuff. Second thing is about the money. How much money do you have in the treasury? How much money are you spending on G&A? How much money are you spending on trying to make me money? And the third question is, how are you actually, or the third group of questions are going to be like, how are you actually going to make me money on this? And if you answer the unanswered question positively, how much is that going to make the company be worth? So like a quick fire question, all the companies get the same questions. And yeah, I hope they're going to want to talk to me, but I really feel like heading inside now because, as I said the previous time, this is Florida in July, and standing outside makes me move to northern Alaska and never look back. At least now I get to tell my wife I took her on vacation at least one day. So let's head inside and see if anyone wants to talk to me. Oh, by the way, this is obviously my new car. I wish it's not. All right, I'm standing here with Frank Trotter of Battle Bank. This is what Rick Roll's bank. What's the fuss all about? What is this?
Well, I think there's a number of things. We had started another bank 20 years ago called EverBank, and we ultimately sold that. And a lot of the clients here were clients with us. After we sold it, the new company sort of abandoned this group of people and de-emphasized the products, their money, it's not a problem. So we think we can drive a truck through this and come right back in and help our clients out again. So we're here to pay great rates on deposit products, give people a lot of choices, be able to deal in precious metals, foreign currencies. You can borrow against your precious metals. You can do special investing with your retirement funds, stuff you can't do at your average bank or broker dealer.
Okay.
So we really felt we were trying to build a community nationwide of people who are sort of similar thinking community. And we don't define community as geography. We define community by the way people self-direct invest. They're maybe a contrarian investor, and they're really just a different group of folks that we like to focus on.
Yeah. Well, and Frank, you just brushed upon it, but who are you guys? I mean, I know Rick Roll from seeing him on YouTube, but why should I trust you with my money?
Well, a couple different things. We have a number of extremely experienced people. I've been in banking for 40 years, about a little bit shorter than Rick's been in the securities business. You know, we have been in the same marketplace together for many, many years in 2 different firms. He built about a $25 billion book and 250,000 clients at Sprott. We built a $28 billion book and about 250,000 clients at EverBank. Very similar market. All our people are very experienced. A lot of the same team we built EverBank with is back with us. And we have new partners that are really experienced, 35-year bankers, people with great experience. And of course, once you're a bank, it's a regulated industry. We have FDIC insurance, heavily regulated, often audited. We're really the ones you want to give your money to.
Right. What about, we talk a lot about skin in the game for these guys that are here, exploration companies and so on and so forth. How is it for you? Are you going to be banking with Battle Bank?
Absolutely, I can't wait. We are also investors. Rick's an investor, as you well know. I'm an investor. A number of our management team has put in what they're able to put in.
Okay.
And of course we have a community of investors. Many of the people here at the conference are investors or will be investors.
Okay.
So we think really an investor and a client is the ideal way to deal with those.
What's left for you guys to do this year over the next, 12 to 18 months to get this rolling? I suppose it's a lot of paperwork, but what else is happening?
Well, paperwork doesn't even begin to describe it. It's a little like starting a mine. We're going to regulators. We're waiting for regulatory approval. We've received some, but there's other agencies that need to weigh in. And it's a lot like starting a mine, starting a securities dealer, starting a lot of different things. So we're really working, we've had a team working to build from the ground up really a great experience for clients. How do you onboard somebody, how do you interact with your bank, and build an experienced team. So what we really need is regulatory approval, a little more capital, then we're out the door.
Okay. How long is that going to take? Like, when are you? I'm based in Belgium. When am I going to be able to bank with you?
When you're hopefully this year, but we can't predict the regulators. We would have thought that a long time ago, and they've taken a lot longer than we ever anticipated. I think that's a common denominator with some agencies these days, and certainly that's what we found.
And you're going to launch that is it going to be available to Europe, other parts of the world as well, or is it North America?
Right now, North America. Down the road, we'll certainly look at that. U.S. and Canada to begin with. EU client regulations are pretty tight. We'll work at that, but we'll have other OECD countries initially, and then some special situations that we know about.
All right, I'm here with John Black of Regulus Resources and Aldebaran Resources at the same time, so challenging task. Why should I trust you with my money? What have you done before that can prove to me that you're worth the money?
It's a great question. It's what we like about the Rick Rule Conference is that this is what he encourages his investors to take a look at. Basically, we're a group that identifies large copper deposits, captures those with the low turn in the market, and then show the full size of those, de-risk those to about a pre-feasibility, and offer those up for a major company to produce. Regulus and Aldebaran are our second and third companies. Our first company was called Antares Minerals, where we successfully completed our business strategy once. We identified a project that we acquired for $15 million. We put about $45 million into showing the full size of the project, and we sold that project to First Quantum for $650 million. So we've executed our business plan successfully once. I think we went into it as very good exploration geologists, and we came out of it as knowing much more about the business. So it's very important when investors look to companies, if the group has successfully completed, made a discovery, successfully completed their business plan, and we can demonstrate that, and that brings us a lot of loyal investors that if we've made money for them, they like how we work, and they're confident we can do it again.
Do you guys eat your own cooking? You buy your own stock?
We absolutely do. So since our two companies are spin-outs of our first company, we have fairly sizable positions. But for example, in Aldebaran, over the last 2 years, we've put in nearly $3 million of our own money into each financing. So it's not simply that we have a core position. We participate in all of our financings as we go forward.
Is that a lot of money to you? I mean, I didn't see the car you drove in on, but is that a significant position in your personal life?
It's a very significant position, yeah. It's the majority of the benefits I got from selling the first company are poured right back into the next two companies. So this is very important to me and my family, and we're shareholders just like all of our other shareholders.
So previously, before starting Ridgeline Minerals, I was the U.S. Exploration Manager for Premier Gold Mines, which is now i-80 Gold. So for over 10 years, I was running budgets of anywhere from $5 to $20 million, helping build mines, take the company into a producing phase as a company. So I was entrusted with a lot of other shareholders' money for a long time and did a pretty good job at it. So now I'm the largest individual shareholder of Ridgeline myself. So I treat this company like it's my own. So I'm very careful with our funds, and I think you should trust me with your money.
Is it your own? Does your wife trust you with her money? Has she put any money in the business, and have you?
Yeah, my wife and I, we're a team on this. She actually helped me found Ridgeline. We did it together. So she actually supported the family for a year and a half while I was actually founding Ridgeline, not taking a salary and stuff. So her and I are pretty equally invested in all of this. We've put $150,000 of our own cash into the company between about 12 and 45 cents. Our cost basis is about 18 cents, give or take. So, yeah.
150, is that a lot of money to your personal situation?
Yeah, so I started the company when I was 34 years old, 32 actually, sorry, and for $150,000 for a young family, 2 kids, was pretty much everything I had, so yeah.
I'm 28, so I know how that feels.
You know the feeling, right? Yeah.
For us, I think our exploration team has really established a great track record over the last 4 years, really putting all the money that we've raised into the ground to good use, and importantly, obviously having very good exploration success with the dollars we've been able to provide them. So when you look at our track record, we've conducted now 3 different phases of exploration. And with that, we've been able to add 130 million ounces of silver equivalent in the ground in the measured and indicated category. and our all-in average discovery costs to find those ounces average less than 13 cents an ounce US. And so we're putting, shareholders' hard-earned money to very good use, exploring, obviously gaining a great understanding of the deposit here, and then really unlocking value for shareholders by not only drilling, but advancing this towards that important construction decision stage.
Joe, what did you do before Abra Silver?
So I've been in the mining industry my entire career, so I have a finance background. I'm not a geologist, but I've been working in mining for close to 20 years now. So I started off as an analyst working for Barrick Gold, then I was on the sell side research as a research analyst as well, covering mining companies. And then I worked at Lundin Mining under the corporate development team there, and I was head of investor relations for about 7 years. So there, I really helped Lundin Mining grow through a number of very creative acquisitions, so really gained significant experience in mergers and acquisitions during my time there. And then I left Lundin Mining to start up a company called Orico Metals. That was very successful. That was a spin-off. I worked there, and in less than 2 years, I was the VP of corporate development. In less than 2 years, we sold that to Centerra Gold for over $300 million in cash. So it was a great windfall for shareholders, and then started running Abra in 2020 with the existing management team. So Dave O'Connor, chief geologist, and his team that we have down in Argentina are excellent, very technical, and have really, again, done a great job for us as we've been exploring here.
You really only joined Abra a couple of years ago, as you just mentioned, so it's not always as easy to build skin in the game. How have you done that? How much of your own money have you put into this?
It's a huge percentage of my net worth. It's probably 90% plus of my entire net worth. So yeah, all my skin is in the game. No more skin left. It's publicly available knowledge. I think I have over 1.4 million shares. Plus on top of that, I have all my options, other incentives as well. Hugely invested into this company here. And I've participated along the way in the financings. So it's not like I was just granted 1 million shares out of thin air. I've paid for those, even through the option exercise that we've done over the years. I've really built up a significant, sizable position for myself. Management as a whole owns about 4% of the company. And again, on a percentage of our net worth, it's a very, very high percentage for us.
Well, I think the greatest example is what we've just done, Antonio. We raised $3 million Canadian in January. We had a first tranche. Goldfields participated in both tranches. Rick Rule came in January. We took that $3 million Canadian, and we've just executed a 3,000 meter drill program, which we just completed 2.5 weeks ago. Results are already starting to come out from that. So we took that money, we deployed it exactly the way we said we would, and we're getting the results from that now.
How much of your own money have you put into this, and specifically, how much of your net worth is into this? Is this a significant investment to you? Does this matter?
Yeah, this is my main investment in, my entire portfolio. I put, in addition to 8 years into this company and starting it in 2016, hundreds of thousands of my own dollars into it. I participated in just about every single financing since the start, and it's my largest single investment.
Okay. Hundreds of thousands of dollars. Is that a lot of money for you? I mean, you have a nice tie, so I don't know how to judge it, but...
Yeah, I'm a geologist, I'm not a wealthy person. I tell people that all the time. But I think it's impressive if you look at the management position in, the company. We're sitting at about 7-8% of the outstanding shares is held by management, direct.
70?
70, yeah,
okay.
Yeah, 7%, yeah.
Okay.
Yeah, so a very significant stake in the company by management and me personally. So yeah, I put as much as I certainly can, and as much as my wife will let me.
Tony, why should I trust you with my money?
That's a great question. Well, I think that's a decision or a question you need to answer. I think what I would say about our team and about myself is that I'm not perfect, but I do operate with integrity and honesty. I instill it in my kids. My parents instilled it in me. So I think it's those core values. And anyone can tell you they're honest, but really ultimately it's your judge of character. So I guess I would judge any management team by their ability to execute on their word. So if they communicate something, did they follow through? And I think I always say the best thing for like investor relations or communications with anyone is, tell them what you're going to do it, and then tell them you did it. And so that's something that we subscribe to here. If you lose your integrity or lose your word, then there's no trust. And so there's nothing, nothing I hate more than someone telling me they're going to do something and then they'll follow me through. And if that does happen, okay, take accountability and tell me how you're going to make it better, or how we're going to fix it.
Do you take trust in yourself? Is your own money where your mouth is?
Yes, I mean, like Tectonic is my entire life savings is in this company. Probably not maybe the smartest thing some people might say. I took a chapter out of Ross Beattie's book, actually. Always invest in yourself. I know, what I'm doing. I know what the company's, where the trajectory is. As soon as I place my capital in another company, there is a leap of faith that they're going to execute, so on and so forth. But putting your money where your mouth is extremely important. So I do trust myself. Hence, all my entire life savings is pretty much in this company.
All of it?
Well, I have some real estate, but yes, the bulk of my wealth, I'm trying to think of numbers-wise, is it's on par with some savings I have on the side that's not supposed to go into mining.
Safety net.
Yeah. But a big chunk of my capital is in this company, yes.
So, Alpha Exploration, we're focused in Arabian-Nubian Shield in Eritrea. I think what makes us distinctive as a company is that the team have a lot of experience in Eritrea in discovering and advancing and selling projects. So we've got a good, strong track record of operating there. And it's a part of the world where you can make serious discoveries sticking out of the ground. Most parts of the world know that's not possible because you've had tens, hundreds of years of exploration, prospecting, this kind of thing. In the Arabian-Nubian Shield, in specific places like Eritrea, there's no modern-day exploration. So you've got a combination of a team with a strong track record of delivery in the country, and you've got highly prospective geology. So the right environment to make discoveries and to build successful projects.
What about specifically the team? You said you've done this before in East Africa. You've done transactions, or how does that work for you and your team?
Yeah, so I mean, in terms of the Alpha team, on the board we have John Clark, who's the former CEO at Nevsun. Nevsun were, I think, very pioneering in the sense they made the Bisha discovery. It got into production within 9 years, or less than 9 years, which is a bit of a record internationally. That went on to fund the acquisition of Reservoir, the Timok project in Serbia, and the eventual sale to Zinjin for $1.8 billion back in 2018. So that project, Mike Hopley's involvement with Sunridge and the Esmara discovery as well. So again, it's companies that have made discoveries, developed and sold projects. My own background as a geologist, my prior involvement was Altus Strategies just before the merger with Elemental Royalties, and as Altus we were a project generator. We were operating in 6 different countries, over 30 projects in Africa. So I personally have a lot of exploration and operational expertise in Africa, but specifically Alpha, there's a lot of expertise in the Nubian Shield, but in Eritrea particularly.
One thing that makes it easier for me to trust people is when I know they're aligned with me as a shareholder. How aligned are you and the team? And more importantly, how important is this investment to you and your team? Is it for you personally a significant portion of your net worth? And how much money have you put into it?
Yeah, so for me, I knew the Alpha team for some years, very credible team. I first looked at the company in March last year, so I came in as an investor, which for me was material, but it was not a large investment, but for me that was the interest. And then I had some discussions back and forth with the company, and then joined about a year ago, primarily because I saw the value of these 3 big discoveries the company's made, which is unusual, 3 different deposit styles. But the other component as well is the fact that deep expertise in the company. In terms of the board and management of the company, they own 14% of the business, and one of the founders has put in more than $9 million. So funded the company when it was private because it was established in 2018. So for 3 years as a private company, a lot of that investment was put in by him, and then we listed in 2021. So we have a very strong alignment with shareholders. Shareholders include people like obviously Rick Rule most recently, but Conwave, Adrian Day, Crescat US Global. So we've got some strong backers. We've raised just shy of $12 million over the last 12 to 14 months. So in what has been a very difficult market, we've successfully raised meaningful capital, which tells you a lot about the the pedigree of the team, the abilities to raise money in a tough market, in a jurisdiction that's poorly understood. It's not well known. Part of the reason we're at this event this week.
Track record, that's it.
What's your track record? Talk to me.
SEMIFO, creation 1995. One person, myself, and one geo. Sold it in 2019 for 1.6 billion after finding 8 million ounces of gold and building many mines. Took over Aya 4 years ago, no market cap. Today 1.8 billion and growing. That's track record.
That is track record, sir. How important is Aya to you and your family? How much of your own net worth is in Aya right now?
I would say it's probably 25%.
Okay, of all your net worth?
That's right.
Spectacular.
And we own 50% of it, which is worth 1.8 billion. So 50%, the board, we own close to $1 billion of stock.
Well, we're a public company, so we're New York Stock Exchange listed. So you're buying a share through that exchange.
Sure.
So now, what does a share represent? Basically, it's exposure to gold, and we're a producing company now. We just actually poured our first bar of gold earlier this week on Monday. So we are now actually in production. We'll be generating free cash flow. At today's gold price, probably about $70 million annually on average over the next 5 years. So we're not an exploration company anymore. We're still going to do more exploration and expand our resources. But we are a cash flowing company. And by the end of the year, we'll have audited statements that you'll be able to check and take a look at and see that we're actually realizing what we're saying we're doing.
Well, what about you personally, though? What have you done in the past that says, like, okay, you can trust this guy's track record? Maybe you don't have to trust his blue eyes, but you can trust his track record.
Yeah, so I'm an exploration geologist. I grew up in Alaska, so I know how to conduct business in Alaska. I know how to do it well and follow the rules, but also be successful at it. So I used to be vice president of exploration for a big company called Placer Dome that merged with Barrick a number of years ago now. I left Placer Dome before that and set up my own company called Nova Gold. We made a major discovery in Alaska called Donlin, one of the largest gold deposits in the world. It's a 40 million ounce gold deposit. I brought Barrick in as a joint venture partner, and that project's been very successful. We created a $2 billion company from a company that started in my basement. So we know what that process looks like and what you need to do to make a real company work. That company was also New York Stock Exchange listed. So we've done that now 3 or 4 times. We did Trilogy, we did Alexco, we did another company originally called Tintina Resources, found a copper project in Montana that was sold to Sandfire, Australian company, so that was called Sandfire America. But so we've been successful explorers, and we like exploration. We're not miners. I don't know how to, I don't know which big truck to buy and which mining equipment to buy. What we do is partner with big companies like Barrick, like South 32 on our Trilogy project, and in the case of Contango, we partnered with Kinross, which is a major international mining company. They know all that stuff. They know how to manage that. They know how to manage, having thousands of people working for them. That's not something that I enjoy doing. I like having a small team. More of a strike force kind of a team. And so we like doing what we do, which is exploration and advance the project so that you have a real project that a big mining company can develop. So that's our business model, basically.
As companies grow, and especially when they grow in market cap, it starts getting harder and harder to retain high insider ownership. How's the situation for you? More specifically for you personally, is this a significant investment for you? Is it a big part of your net worth?
Yeah, it is. I didn't get cheap stock. I didn't start the company, so I didn't get founder shares and all that. I own about 6% of the company, and I take part of my compensation in shares. But I've participated in almost all the financings that we have done in the last 3 years since I joined. So, I own 6% of the company-ish in that neighborhood, and it does represent a significant part of my personal net wealth.
So if it doesn't work out, are you sleeping on a couch or on the front porch?
Probably in the doghouse.
That's a great question. You shouldn't.
Just no one with you money.
True. Look, judge me on what the company's done over the last 4 years We have been very disciplined. We've put 88% of our capital in the ground. We've generated 500% return to our shareholders. So when I took over the company, it was 20 cents a share. The stock's $1.11 today, and it's been higher, but that's where it is today. The market cap has grown significantly. We've got a great team, great discoveries. So we run we're a hardworking team. We've delivered some incredible results, incredible return to our shareholders. So to answer your question, judge us on our past performance.
It's easier to just trust someone when you know they're aligned with you and they have skin in the game as well. What percentage of your own net worth have you put into the company?
Percentage of my own net worth. I'll describe it in this way. I own roughly north of 1% of the company, and it's over a $315 million company, so that's a material amount of money for me.
We have a 20-year track record of creating value in the natural resource space.
That's it? That's the pitch?
I'm happy to go into all the detail you like, but we've been building this asset portfolio for 20 years. We have 250 mineral property positions worldwide, and I can tell you this. Y'all want to be as long mineral rights as possible. Mineral rights are great things to own, and the best way to own mineral rights is through royalties. Royalties are phenomenal financial instruments with immense embedded optionality. At no cost to the royalty holder, we're exposed to commodity price optionality, but also discovery optionality, which comes from all the exploration work paid for by third parties across our portfolio. In addition to that, there would be metallurgical aspects, engineering optionality, etc. These aspects of optionality associated with the royalty are multiplicative. So as the price of the commodity goes up, they find more gold. The metallurgists figure out how to get more gold out of the rock. The engineers figure out how to mine deeper, and all those multiply together to become great successes in many cases for royalty holders. We have a strong track record of accumulating royalties on great projects in all over the planet.
How much, it's basically, do you eat your own cooking is what I'm thinking. How much of your own money have you put into this company so far?
So collectively, the management and board of directors owns 12% on a fully diluted basis.
Okay. How important is that to you personally as a CEO? Like, is this a significant portion of your net worth, or would it not matter if something happened?
No, absolutely a significant portion of my net worth, yes.
Look, I'm not sure about trusting anybody with their money, but in terms of investing, why should you potentially look to invest in hot chili? If you're wanting exposure to copper, then hot chili is a fantastic place to start. We offer very, very large leverage to the oncoming copper cycle that is about to unfold. So we have a project that is one of the lowest risk, near-term, meaningful new copper supply options for the world. One of only 6 projects globally that can produce some 100,000 tonnes of annual copper production. And what's really important about that is our project is half the cost to build in comparison to our peer projects, and really is extremely leveraged because of that metal output to the oncoming copper price increases.
When I ask why should I trust you specifically with my money, I mostly am talking about track record. What have you done in the past that tells me you shouldn't trust him, you can just trust what he's done? What have you done in the past?
Well, look, I'm a geologist by background and had a very, very lucky career in the exploration business, in the gold industry in particular. I worked for many years also with Placer Dome in their global group, mainly focused on acquisitions, and that's what eventually led me into running my own company, supported by our original chairman, Murray Black. And for the last 16 years, my track record is bringing a company from inception with no resource to a new country in Chile, putting together a strategy to build a very large copper developer that could eventually turn into a large copper producer. And that's what we've done for 16 years, 14 years since we listed this company, navigated through an entire down cycle of copper to build a 1 billion tonne coastal copper play in Chile. And so I guess what we've been able to do is navigate that process, get to the point where we're now in our final straight and starting to make our sprint towards the finish line to project finance this and put something into the market that is going to be the equivalent for the Australian market of a new Oz Minerals arriving in the copper producing space.
Are you guys also eating your own cooking in the meantime? You're buying your own stock, putting your own money where your mouth is?
Yeah, look, our founder group that started this, the Kalgoorlie Group, through its various holdings, including myself as part of that group, we're still the second largest shareholding by group. We've supported the company from its inception with heavy investment, and unfortunately my wife has to wait sometimes many years for her next renovation project. So yeah, I mean we certainly put our money where our mouth is.
How important would you say this is to you, besides pissing off your wife if it doesn't work out? How important is it to you and your net worth? I mean, what percentage of your net worth is this investment?
Percentage of my net worth outside of my family home, it's pretty much everything that I can lay hands on with savings. So I think that that we have a very dedicated group of management that have stuck close together. My colleague Jose Ignacio, our vice president down in Chile. We've been a very deal intensive company to build this from nothing through consolidation steps. And I think that the company has a lot of growth in front of it as we approach this final phase of development that we're investing in heavily. We're supported by a large oversubscribed capital raising just recently, and that's given us strong treasury to really push towards being a first-in-line project for something of this scale.
Because I trust myself with everything that we're doing. And frankly, the team has done this 4 times and delivered over $2.5 billion to shareholders over the last 15 years. Our real specialty is exactly what we're doing right now, is going into historical camps where there is a historical resource, in a good mining jurisdiction, and using our geological expertise and our engineering expertise to really extract value for shareholders. And as I mentioned, it's not our first rodeo. We've done it 4 times, and put pretty much all of my own personal capital into this company. I'm about 1.7 million into it, and at 37 years old, it's a significant chunk of my savings.
That's typically my next question, is like, how do I trust you? Is if you have skin in the game, if you align with me. 1.7 million is several thousands of percent of my net worth. How big of a chunk of your net worth is that?
At the time when I was 32 years old, when I was building the company, it was, I would say, all of it.
Well, what we've done in the past is we've made a real high-grade gold discovery in northern Quebec. It's called Renault. It's owned by Sumitomo Metal Mining, and we have a 4% net smelter return royalty on it. I think that's actually real value that we've created in the past, and we're out doing real exploration elsewhere in eastern Canada and up in Alaska also, and our focus is grassroots exploration, which is high risk, but again, I think we have a track record of discovery, and we'll likely make more of these going forward.
You guys ride your own bicycles, you eat your own cooking, you put your own money in the company?
That's right, yeah. Put a lot of money in the company, especially over the last year or two, where we were trading around 70 cents per share. Now we're up in the 90s. So, but yeah, still buying stock myself, and some of the other insiders as well. So it's yeah.
How significant of an investment is this for you personally? Like, what percentage of your net worth have you put into this?
Well, now it's the majority of my net worth in terms of stock owned. But over all the years, I don't know, I might have invested probably $500,000 or something of my own money. So it's a very significant amount, especially since I started the company when I was 30 years old, when I didn't have a lot of money. So I've increased my position over those years, and yeah, like I said, still buying the stock in recent years. And
right behind me, you'll see our ticker. We're an NYC listed company, which I think is puts us in a pretty unique position, especially for this investor base, where we are really providing investors a pure play and clean nickel and cobalt. But being an NYC listed company, I think that kind of puts us in a unique position. So for the U.S. investor base, I think we're a combination of not only the world's premier tier 1 nickel project, but also we provide clean processing. So if you're going to identify new sources of battery metals, you want to pick the best. We have the best nickel project, in my view. and we're going to do this in a clean, sustainable processing methodology, which is really our expertise, doing, really applying our hydrometallurgical expertise to these mining projects.
What I mean by that, when I ask you why should I trust you with my money, is mostly asking about what's your background? What have you done in the past that can prove to me that you're going to make this a success?
Yeah, so, all right, I like that question. So I am an investment banker by background. LifeZone is a company that I advised, so I was their investment banker, and I think it was really the draw for me to LifeZone was probably the best way to answer that question, because I saw a company that had phenomenal leadership. The founding chairman, Keith Liddell, I mean, this is a company that he really spent 10 years researching and developing this specialized technology, and I saw my ability to come in and help commercialize this business and complement Keith. I started doing that as a banker, but I think now coming in as as CEO of the company, for me, the best way to kind of leave investment banking is to get a glint in your eye about a company or a project or a client. And for me, I was all in on LifeZone. I had the opportunity to come over full time.
When you say all in, how significant of an investment is this for you and your personal portfolio?
Well, I think a way I'll answer that is when we acquired our flagship asset, the Kabanga Nickel project, we had 100% investment from all our employees. So I think that's a rare demonstration where all the core leadership all invested their own money in the project, and we've all been invested in the project since. So 100% participation from LifeZone on our flagship asset. Yeah, and I'd say we maintain that, and I think if anything, probably difficult to find another company where 100% of their employees have been invested.
All right, I'm standing here with Javier Reyes. He's currently the largest and the controlling shareholder of Luca Mining Corp. Javier, I'm going around asking people why should I trust them with my money, but I assume that's the question you were asking the team before that as well.
That's correct, Antonio. So I've been on the buy side most of my career. It's a 25-year plus career. And the same as you, I invested in several companies. I've been burnt in several of my investments. And I came to the conclusion that this time around, when I decided to go all in into this opportunity, everything had to be right. So for me, I was not willing to take any permitting risk. Of course, I was not willing to take the exploration risk that comes alongside the permits. I was not willing to take the capex risk, which means as they get the permits trying to build the operations, and also was not willing to take any management and execution risk. So having said that, we basically scan all the companies that fit our profile all around the world. Again, I've been on the buy side most of my career, and I found this opportunity, which actually I was a previous investor and I was losing in my original investment. But I thought it had everything we require for us to make a big commitment and for a company to be successful. So it had a 2.7 million global resource between the two mines. Of course, all the permits in place. And very important, it has over $500 million US in infrastructure in place. And the market cap now is only 80 million Canadian dollars. So I guess you have everything you need to feel comfortable in going in. And of course, the entry point was extremely attractive. No? Very important, we were not willing to take execution risk, which means that along these 25 years, you build relationships and you're able to put an incredible team together. I'm not the CEO because there's better people than me to take care of the operations. So we have a new CEO because at this stage of the company, we need experienced banker help us share the story around the world, and that's where he's going to be focused now. On the other side, we have an incredible team that has very seasoned international mining people that come from some of the most prominent mining companies in the world, like Lundin Mining. And let me be clear on the risks, right? Because I think we need to be fair with shareholders. What are the risks of the investment? No? So the risks is jurisdiction risk. It's a Mexican investment, and it comes with the risk of operating in country, right? It's political risk, social risk, security risks. But we were able to go to bed every day being able to deal with those risks because we're Mexicans. We have the right team to deal with those risks. What's very important as part of my purpose in life is giving back to the community. We have a strong focus on shifting to over 50% on the headcount being women, and I have a strong belief, and that has worked in my previous ventures, that having women leading my operations is the right way to take care of the community, to don't have any issues with security, etc. No? What other risk we have? We took over, even though I said we have $500 million in investment in place, some of the equipment is sold. No? So what happens when you have all the equipment and you don't have all the spare parts on site? Means that when something breaks, rather than take hours or minutes to come back into operation, it takes days, it could take weeks. So that's a risk, no? Of course, if we had everything perfect, the stock was $4, no? So how do you balance those risks? Of course, we're bringing a new contractor in place because they have brand new equipment. It's one of the most important contractors in Latin America, and he's going to help us balance and reduce those risks. So I guess execution is the most important risk going forward because we have a big deposit, most of the investment in place, fully permitted, a great team leading the operations. So now my goal is that we always have the right people leading the very important roles into the company. And I guess I'm Mexican, and my role is to balance this international team we have with the Mexicans and be able to really work as a team. So going forward, the catalysts are very simple. We have a big plant in Campo Morado, 2,400 tons per day. We did Q1, 1,400 tons per day. The reason we are not feeding the plant at full capacity is because, as I was saying, our equipment is sold. The new contractor is coming in, so we'll be able to finish the year hopefully at 2,400 tons per day, which is just very low-hanging fruit, very easy to do. I have this relationship with this incredible contractor, top one in the country. He does the mining for the most powerful countries, mining companies in the world that operate in Mexico. So it's a very easy catalyst for the company that translates in the bottom line. This mine should give us next year $35 million in operating profit, just this one. And we have our brand new asset going into commercial production in Q3, which is the Tahuehueto mine. It's a brand new gold mine. 20 years of mine life in resources, a lot of exploration upside, and again, going into commercial production in Q3. So last year we did $100 million. This year we should do 150 million Canadian dollars. Next year we should do 250 million Canadian dollars, with maybe $80 million of free operating cash flow at the mine level. Okay. If you compare to the $80 million market cap close that we have now, I think it's a very attractive investment proposition. That's why we decided to go all in into this opportunity. And as long as we manage our risk and we are really focused on execution, I think this should be a successful story for shareholders.
With the new management in, or with the new CEO coming in, it's kind of hard to have skin in the game off the bat, but you do want to have that with management. You want them to be aligned with you. Or is the new CEO going to be buying in the open market, and how significant of an investment is this going to be?
Well, he's going to end the next few months with a 5 million share position into the company. Okay. He has paid for most of the shares himself. So for me, it shows a strong commitment. He's a very senior banker with a very successful career. Not just successful, but extremely honest career. And I think that's the people we want in our team, no? That have a strong commitment and that believe in what we are doing, right? He left a 25 very successful banking career to join us and help us make this dream true. And for me, it means a lot, right? Because he's giving away a lot. He's basically stepping away from the comfort zone. He was a very successful banker because he believes that his 5 million shares, when we eventually sell for $2 or $3, is going to make a difference in everybody's life. Putting to the side him as the CEO, which his main goal will be to bring the street on our side and communicate the story. The mining team, the operations are running, I would say, in a way that I feel proud. But still, I think that the next 12 months, it's only focused on execution. So the story is simple going forward, means optimization of our operations. We have a brand new mine that needs to be optimized, as well as the existing polymetallic asset we have, exploration and expansion. And again, when most of the capex is behind, shareholders need to feel comfortable that there won't be dilution or unnecessary dilution going forward, right? Because that's usually what happens. You invest and you end up being diluted along the way, and it has happened to us in most of our investments in the past.
Well, I've got a track record in making people money in the mining space. So my career started 15 years ago with a company called Papillon Resources, which had a project that was acquired by B2 Gold. I have been an investor in the junior mining space, and I know how painful it is to watch management teams fritter away your hard-earned dollars. So that's been a big focus of ours, is making sure that we put as many dollars into the ground, into value-creating strategies.
Maybe more importantly, are you trusting yourself with your own money? Are you putting your own money in the company?
Yeah, I've invested quite a lot of my own money in this project, and a lot of my net worth is tied up in the company as we speak today, and hopefully it's going to be orders of magnitude greater than it is today.
That's typically my follow-up question. Like, how important is this to you personally? What percentage of your net worth is in this? But now that you told me it's significant, maybe I should ask you, if this doesn't work out, are you sleeping on the couch or in the doghouse?
That's a good question. If it doesn't work out, I may be in the doghouse.
I come from a history of managing sovereign wealth funds, global pension funds. My investment philosophy is minimum risk. So when we deploy capital, we do it in a manner that is ensuring that we don't waste. Because essentially what we're doing is taking your hard-earned net income and then placing that into the equity value of the company and then managing those equities going forward.
Do you trust yourself with your own money? Are you eating your own cooking?
Sorry?
Do you trust yourself with your own money, and are you eating your own cooking?
No, absolutely. I don't. If you get a $10 note, it's a prisoner for a long time. So my view on how you go about things, particularly in mining, is stay away from the fads, because they're so easy to just lose money on, and always employ the best people.
Right. What about putting your own money into the company? Is that something you guys do? Is it incentivized on the board level?
Yes, I've been invested in every capital raise. I've converted all my warrants in the early stage, and I've bought shares on market.
So this is an important investment to you. That's kind of what I'm trying to understand here. Sure. Are we actually aligned, and how big of a portion of your investment portfolio is Meridian?
Because I don't want to be distracted, my entire mining portfolio is now focused on Meridian. I don't want to be distracted by other companies. I don't need other companies' management. I actually balance myself and focus on myself, my own management decisions.
Well, I think it's not so much trusting me, it's trusting geology. We have the best mineral deposit in the rare earth space on the planet. I think that's pretty clear. It has the holy trinity of mineral resources. It has, in its class for rare earths, it has the highest grade, it has the highest recovery, and it has the largest tonnage. And what that equates to in the end is probably the best project on the planet, certainly the best undeveloped project on the planet.
Do you trust yourself with your own money? Are you putting your own money in the company?
Absolutely. I invested, I think, just in the last couple of weeks, I bought another substantial set of shares, and I think I'm probably the fourth or fifth largest holder of the company's stock.
How significant is that to you personally, though? That would be a very significant amount to me, but how significant is it to you?
Nearly everything that I own.
Look, we've had a 14-year history with the company, and I think over the past 14 years we've demonstrated a lot of success, both on an exploration basis, on a transaction basis, and a royalty creation basis. And we've grown the company from a very small stage in its infancy. We've done a lot of deals over time. We've created 2 key assets, and now we've got 2 flagship royalty assets. So the company, especially in the past couple of years, has gone up in share price a fair bit, and I think we've demonstrated that sort of track record to our shareholders very well.
Do you trust yourself with your own money, or are you putting your money in the company as well?
Absolutely. This is my life. So again, as I said earlier, 14 years into this, this is my heart and soul, and everything into this company means a lot to me.
Okay. Is it a big part of your net worth as well, in terms of an investment portfolio and stuff like that?
This is where my money is. Obviously we all invest in the mining industry, but for the deals that we run, you should have pretty well almost all of your investments into the deals that you run. That's an important component of what we do.
I've been very successful in guiding investors to put money into my companies, because I've been in the gold group. We share the G&A between 4 companies, so it cuts the overhead down. And we have been very successful at making discoveries over the last 20 years.
Do you trust yourself with your own money, or are you putting your money where your mouth is?
I put my money where my mouth is all the time. I'm usually the biggest shareholder of most of my companies, most of the public companies I run.
Right. Well, so you run a couple of public companies. It's Radius, Volcanic, Rackler. What else?
That's it. Those three.
Okay. Well, how do you manage to deploy your capital in all these companies at the same time? Like, how do I know which one is really important to you?
Well, I think I have about the same percentage in all three companies. Actually, less in Volcanic. Radius is a company I started 20 years ago, and I focused mostly on that. Radius had a very large land position in Guatemala, but it was active in Mexico. So Guatemala, the politics in Guatemala changed. So I shelved those properties, held onto the properties, but stopped working on them. And then when the country became pro-mining again, Volcanic optioned Radius's properties and went into Volcanic. It went into Guatemala to explore those properties. So my interest in Volcanic is probably less, but I've got the interest in the properties they have is obviously quite significant because I have Radius shares and I have a lot of Volcanic shares.
Been lucky enough to be the CEO of Riverside for the last 17 years, and I haven't blown it up. Before that, I worked with major companies and I had the luck of being involved in major discoveries. Some of the biggest discoveries in Mongolia, big discoveries in the United States, and had a lot of fun working in Mexico where I also found things. So previous success and not blowing up Riverside over 17 years.
Didn't blow up the majors either?
No, in the majors it was a lot of fun. We made discoveries, and that was fun. And I was able to work in different countries, founded the subsidiaries in those countries, and had a lot of fun doing the exploration there.
How important is this investment to you outside of the 17 years you've invested into it? How much of your own net worth have you put into the company?
So I'm actually one of the larger shareholders. Collectively, the management owns 10%. I own about 8% myself. And I've been able to invest in every financing. Never sold a share in 17 years. We haven't had to finance significantly for the last 4.5 years. We have no warrants, no debt, and over $5 million cash.
So there's no founders shares at like a half a penny or something like that?
There were founder shares, and we now walked for 17 years. I've also continued to buy on the market up at $1, 55 cents, 30 cents, all the way through. So I've always bought. My average cost basis is over 35 cents.
We've been in Mexico only, out of Halifax, east coast of Canada, for almost 30 years. In that time, we built our group 3 large mines, and we sold 3 more to majors. And now we're getting ready, and we've proven that we can build El Tigre. You bet on guys who build mines. That's where the real money's made. And so that's why you should trust us with your money.
Is your wife trusting you with your money? Are you trusting yourself with your own money?
I am. We're. If you want to ask me if I'm a big investor in the company, I would be outside of the large institutional shareholdings. We'll talk about those in a minute. I'm the largest shareholder of the company. I put my money in when we founded this project back in 17, and we only sell our stock at 2 times. When we build a mine, or if we sell the company to a major. That's a fact.
When you say you put your own money into this company, how significant is it to you in your personal situation? Is it a decent percentage of your net worth, or like?
Yeah, that's a multi-million-dollar investment for me. Don't want to get into my net worth. We've had a lot of great successes, but it's a substantial amount of money that I've invested in my own company.
We've discovered the world's largest rutile deposit, and also coincidentally the world's second largest graphite deposit, all in a small country called Malawi on the east coast of Africa. So yeah, I think you should do well in trusting us with your money.
What did you do before this? Any transactions or anything like that involved in your past?
Worked in many sub-Saharan African countries: Malawi, Mozambique, Zambia, DRC, capital raises in a number of places, Katanga Mining, for example, Baobab Steel, Bateman Engineering. Yep.
One way that makes it easier for me to trust you is, as people always say, skin in the game. How important is sovereign to you personally? What percentage of your net worth have you put into this company?
I would say about 15%.
Okay.
Yep.
Good. And then over time you've kept putting money in, or like, are you buying in the open market, or like how does that work for you?
It's partly I guess some sweat equity. It's part of that the process. Open market. Our whole management team is incentivized that way. Management team, board, all buy in the open market when we're outside of closed periods. So everybody's fully vested in the success of this project.
Well, we have a great opportunity, really. A lot of the companies here are early stage exploration and moving forward. We have an asset, we bought an asset that's already permanent, already built, and can quickly move into cash flow. So we've a unique opportunity that we bought an asset very cheap, and we're in development of that asset, and the plan is to restart back in 2025. So it's a quick return to production. In a good and gold environment, today is the right time to be putting mines back into production.
What I mean by my question is mostly like, why should I trust Shane Williams with my money? What have you guys done before that makes you worth the money, basically?
Yeah. So my background is an engineer. I've worked all over the world with large companies building, operating mines. So, that's my background. I've done it a number of times. I've put 4 mines into production in different countries. Worked in Turkey, worked in Greece, worked in Sweden, and in Canada. So I have a good track record of putting mines, and very similar to what we're trying to do. Old mines, turning them around, turn around mines, put them back into production. We also have an excellent board of directors. Tony McCooch, who built Kirkland Lake, very, very successful, built a big company in Canada. Duncan Middlemass, who built Wesdome Mining. So we've a very technical team, all mine builders who have done it before numerous times. So that gives us a good track record to do what we said we're going to do.
Are you guys also eating your own cooking? You're putting your own money in the company?
Yeah, we are. We've invested quite significantly. Frank Juster is our largest shareholder. He's a 10% shareholder of the company. I put my own money in. Tony's put his own money in. So we're very committed to this story long term.
How significant would you say this investment is to you as a CEO personally? Maybe percentage of net worth, or just generally, how significant is it to you as a person?
This is 100% for me.
Oh, wow.
I'm all in on this. I believe, and I've been successful before, if you're going to do a project, you need to put full 100 effort into it. And building these projects takes a lot of time, takes a lot of effort. You cannot be distributed around a lot of different projects. You put all your effort into this, put all your money and your time into this to be successful. That's what I found in my career, and this will be the same for this project.
Let's talk about what you're doing this year. Started off with Treasury. How much money do you have in cash right now?
Since we'll talk about both companies, with Regulus, we're in a very good position. We have about $16 million in cash, and we're pretty well done with drilling that deposit out right now. So I don't think we'll do another financing with Regulus until we see the end game on going forward. With Aldebaran, we had $10 million at the end of March. We've continued our drill program, so that's down to about $5 million right now. With that, with Aldebaran, we're still very actively drilling the project out. So we will need to raise some additional money between now and the end of the year for next season's field campaign.
Okay. What G&As are you running on each company?
We have the advantage, since our same management team is spread across each company. Our G&A is about $1.5 million per company right now, Canadian.
Okay, so the same amount for each company.
Yeah.
Okay, and on top of so for Regulus, you're not going to have to raise, not even for G&A, for nothing.
In most scenarios that we see going forward with Regulus, we probably don't need to raise additional cash. We have a lot of interest in the project right now. We pretty much know the size of the deposit on our portion of the property, and it's really more of a district consolidation and interacting with companies that are closely monitoring the project, and we hope to attract an interested party to acquire the project.
Okay. How do you do that? Like, do you have to spend money on it? Is it just mostly you kind of networking? Like, what does that process look like exactly?
Actually, it's all of the major companies, since the big copper companies need new projects to develop. Sometimes they have those in their own portfolio, but many of the big copper companies haven't been consistently funding their own exploration. And so they find themselves in a situation where they either don't have the projects to develop, or they are looking for a better project than what they have to develop going forward. So part of what every major copper miner should be doing is monitoring what junior companies like ourselves are doing. So as we put out results, and particularly the type of results we put out on both projects, that draws attention. So oftentimes the groups that are more on top of their game are contacting us and asking us about it. We reach out to our friends and our contacts with companies to make sure they're well aware of what we have. And the typical pattern is we'll enter into a confidentiality agreement, which will allow the major miner to monitor and review what we're doing. In some cases, it evolves to the point where they approach us with the concept of a strategic investment. So for example, our project in Peru with Regulus, Rio Tinto has a 16% equity position in Regulus as part of their process to monitor and help us advance the project. They're looking at us, they're watching as we go forward. So it's a great way for us to raise money, particularly when the markets are a little difficult. A strategic investment typically comes in at a premium to market with no warrants, so it minimizes our dilution. And we also get the technical endorsement that I can tell you majors are interested in us, but there's nothing better than seeing them deploy their capital to help us move forward. With Aldebaran, we have a similar situation that South 32 is a strategic investor for us moving forward. So that's one way we move forward. But there will be a number of other companies for both of our projects that are under confidentiality. It's confidential, we can't name companies, but they're monitoring pretty closely what we're doing, and that's a normal part of the process.
I know you have some money in the bank. How much do you have left now?
Yeah, so we have $2 million in the bank. We raised 2.25 back in May. The main focus for this year is we're actually really focused on our Big Blue project for the first half of the year. So we're doing an IP program. It's going to be about $100,000 US. That starts in 2 weeks. What that's going to do is lay out, hopefully, a really exciting maiden drill program for us in the fall. So with that, we're also going to be doing some additional staking. We're doing a permitting initiatives at our Salina project. And then our partners are spending $5 million. Nevada Gold Mines, which is a joint venture between Barrick and Newmont, they're spending $5 million US on our Swift project this year, which is a significant spend as well. So overall, our budget across all projects this year is about 7.5 million Canadian. Of that, Ridgeline is putting about $500,000 into the ground itself. So I think that's really good leverage on every dollar we spend. Our partners are spending significantly more. So.
Okay, interesting. So actually from the total drilling budget, you're putting in the cost to your shareholders like less than 10%?
Yes, that'd be fair. Yeah.
How much do you keep of the project though if it's successful?
Yeah, so if, for example, $40 million worth of deals across 2 projects with Nevada Gold Mines, if they were to hit all their spending milestones, spend the full, in the case of Swift, $30 million to earn 70%, if they then chose to take the project all the way to production, we would then retain a 25% free carried interest all the way to production. And now the reason they would get 75 is they get the additional 5% by providing a debt facility for us to participate in the build of the mine. They then recoup that debt facility on first gold pour. So they would take out from our profits to pay back that loan. So the great thing about that is a lot of times juniors actually end up getting diluted out of their own discoveries, right? They partner with a major, they can't keep up with the cash calls, and they end up getting diluted out. What this deal does for us is it allows us to actually participate in a meaningful way all the way to production without having massive dilution to shareholders like yourself.
It's that ratio, I suppose, that counts where you're spending less than 10% on this project, but you're retaining 25%. So there's that delta that actually...
Well, we're actually spending zero right now. So the $500,000 that we're spending this year, that's actually going in the ground at Big Blue and Salina and our other projects. So we're spending nothing at any of the partner projects. So they have to fund 100% of exploration. They have to hit those minimum spends to earn that minimum interest of 60, which they can then scale all the way up to 75 if they hit their milestones. Yeah.
How's G&A for you? How much money are you spending on G&A this year?
Yeah, we spend about $100,000 a month just on true, overhead G&A costs. And then you factor in land costs, all that, the kind of ancillary exploration costs. We burn about $150,000 a month all in, with 50 of that being related to land exploration related stuff. So yeah, we're going to have a nice cash position at the end of the year. If we want to go do a significant drill program at Big Blue, consider adding a little more to the treasury to support that drill program, but that just really depends on what we see coming out of the IP this fall.
How's the company's financial situation right now? How much money do you have in cash?
We have over $20 million. So we raised $20 million in April. That was Canadian through bringing in Kinross Gold and Central Puerto, which is a large utility company in Argentina. They each invested $10 million in exchange for 4% interest in the company. So we raised that money. So yeah, we have over $20 million Canadian in the bank. The 20,000 meter drill program that's well underway now will cost about $8 million US. And so we're fully funded for all of that, and then fully funded for the feasibility study next year as well. And so we're fully funded for 2024, 2025, so we're in an excellent financial position.
That includes G&A. How much G&A are you running this year?
Yes. So the G&A costs, I'd say about maybe $300,000 per month or so. That includes, increased G&A at site now that we have a active exploration campaign going on. So yes, that includes G&A for 2024, 2025.
How much money did you have in treasury now?
We have 1.8 million. We're still paying some bills from the drill program. We'll be down to about 1.5 million Canadian at the end of next month, and that's enough to get us through. We will be doing a financing in the fall. We've gotten great support here at Rick's conference, from investors coming up saying they'd like to participate in the next financing, and Rick has been very supportive as well. So we're optimistic about the future.
How much money of that 1.8 are you spending on unanswered question? How much is going to be the exploration budget?
Well, certainly getting all the results out, and we still have 8 drill holes to publish, and setting the scene for interpretation of all that information and getting that ready to plan the next round of drilling. It's always an iterative process where you raise the money, you deploy it in the field, you get the data, you get the results, you pull the team together, you interpret the results, and then you make a plan based on what the results are telling you.
Okay, why I'm asking that is because I'm wondering how that's going to be split between G&A and drilling. So how much money are you budgeting for G&A?
Our burn rate is is about $35,000 to $50,000 a month. We've really dialed that down. We spend as little as possible on G&A, and then we reserve the rest for technical studies. One of the things that we're doing right now is a hyperspectral scanning study of the drill core. It's a quantitative way of measuring the alteration mineralogy in the drill core, and it's continuous drill core scanning, and we just implemented that a couple of weeks ago, and we're excited about the results. That's just going to help us better with our interpretation and vectoring and figuring out where to go, where to make the next round of drilling the most efficient as it can be.
Okay, so it's you don't foresee having to do a capital raise because for the next 12 months you're spending about $500,000 on G&A, and then the rest you can do in exploration. But do you foresee a capital raise within those 12 months?
Oh, I do, yeah, because I'd like to start planning for the next round of drilling. The only thing that's holding this program up is capital. We can drill a lot more. We drill 3,000 meters, which is what we could afford to do, but we've got 52 breccia targets that haven't been drilled yet. We have about 60 other targets on the property that haven't been drilled yet. So, we're fortunate that we've got a project that's so well endowed, but it takes a lot of drilling. So our biggest constraint right now is capital. With more capital, we can do more drilling. We're going to have more discoveries, resource drilling, and then we want to move on to a PEA once we get the resource to a critical level.
But that's maybe a bottleneck too, though, right? I mean, since Rick came in, you saw a lot of liquidity picked up, stock price went up, you found some nice stuff, everything was going well. Now after this news release, you gave back a lot of that gain that you did. So raising capital here might be a challenge. Do you have any creative options, or how do you plan to cash up the company?
Well, yeah, we do have some options. Royalties are always an option for us, and we've looked at that in the past. Doug Silver is our chairman, and Doug is extensively experienced in the royalty side of the business. We always look at that to see what value the royalty could generate from us. I mean, obviously we'd prefer to hold on to the royalties later as the project matures and gets closer to a definitive, mining project that would have, a construction date associated with it and stuff like that. Royalties get hugely valued in that type of thing. But that is an option for us that we're looking at. Obviously, good results lead to a better share price, and a better share price leads to less dilution in the financing. But I think the main thing is just attracting enthusiastic investors that are excited about high-grade copper, gold, and silver in a mining country like Peru. We've got high-grade right at surface, and so there's a lot of great things that come with that. But in addition to that, we're still chasing the big tier 1 type of targets that brought Goldfields in as a strategic investor back in 2018, and they've invested $12 million since the start of their investment. So
how's the treasury, cash, everything else?
Yeah, so as far as treasury and cash is concerned, we have just over $1 million in the bank right now. We do need to do another capital raise in order to facilitate the drill program we want. It's very necessary to drill, and it's obviously you need capital because it's the gas that goes into the car if you want to drive somewhere. So right now it's $1 million, but we intend to raise a bit more capital to execute our drill program this year.
This year, raising capital is challenging in this environment. Yeah. When do you want to go and drill, and what would that mean for when you're raising capital?
I've been in this industry, investing since 1995, but formally with with a company which was Kamenek since 2005. And you know what? It's never easy. It's the same thing every year. It's hilarious because I catch myself, oh my God, it's so hard to raise money. It's so hard to raise money. But good stories and good people get funded along with good projects. And yeah, it's kind of like a catch-22. You have to raise capital. You can't really hide the fact that you need to, and nor would you. So from our perspective, it's a great opportunity to bring in allow our shareholders to average up or average down, and also get access potentially to a warrant, and also bring in some new blood. So it's extremely important to raise capital. It's the only way you function as a company, and as an exploration company. If you're not drilling, you're finding diddly squat. The drill has to turn in order to find something.
So what would that budget look like for you in total, and also how would that split between what you're putting in the ground versus what you're giving out on G&A?
Sure. So our goal that we set from day one is 85% of the capital we raise, or 85 cents of every dollar, has to go in the ground. There's no escaping either that, to run a public company, you have to have auditing, you have to have auditors, there's public listing fees, there's marketing, there's G&A, personnel, people. So, you can't ignore that fact, but, from our perspective, if we raise, for example, $3 million, 85% of it's going to go into the ground.
What would that mean for you specifically in terms of G&A? Like, what are you budgeting per month on G&A this year?
Yeah, we've amped up the team a bit in advance of the drill program, but we run a fairly lean, tight ship. So you're looking at about $100,000 a month on the G&A front, and that's all encompassing.
What's the treasury looking like right now?
So we closed the second tranche of a financing of just about 6.85 million Canadian dollars back in April. So we have a little over $4 million at the moment. That funds our drilling through the balance of this year. So we in total expect to complete 20,000 meters of drilling at our key Alberta gold discovery. We also have a RAB rig coming to site where we'll be looking to complete 20,000 meters of RAB drilling. So that's all basically paid for by what we've raised in the last 12 months. We're fully funded through 2024.
I don't assume East Africa is expensive to drill, but how much is that going to cost you, the 20,000 meters?
So in terms of drilling cost, it's pretty competitive. So we're looking at about $100 per meter for RC. That's all in, including the assay cost. Yep. And for diamond drilling, it's about $200 per meter. So again, very, very, very comparable costs. We are targeting at surface, near surface mineralization. So we're not talking about deep drilling at all. A lot of the mineralization we've been hitting sort of 50 to 100 meters down. So relatively shallow holes. We've got, as I said, 3 discoveries. The focus is on Alberta, which is the gold discovery, where we announced some very good results back at the end of February. We're also going to be putting a few holes into the porphyry discovery we made. Very disciplined program. We're not going to draw attention away from the main gold prospect. And we also have a VMS discovery as well, which we'll be doing drilling as well. And again, that's all funded from the current treasury.
So specifically, how much money are you spending on exploration this year? What's the budget?
Exploration this year is, in total, it's going to be about $4 million. So the work we've done in the early part of this year and for the balance of 2024.
Okay, but that's everything. So that's the VMSs and everything else outside of the 20,000 meters.
Exactly, yes. So we have one license that's 771 square kilometers. So that's work on that license. We have 17 other projects on the license, but we are focused really on those 3, and the one in particular, the Alberta gold project.
What about G&A? How much money is that going to cost you in overhead?
G&A is around about $1 million Canadian per year. So it's fairly competitive, a fairly lean team. There's only one expat in Eritrea. Most of the team are local geologists. One of the geologists has got sort of 30 years experience and actually made those 3 discoveries. So we have a pretty low footprint. The team are mostly remote working. We don't have an expensive head office. So for that reason, we've kept the G&A costs pretty competitive.
How much money do you have in the treasury?
So we have $100 million US in the treasury. We're fully funded. We have our 3rd plant was commissioned over the weekend. We did the first silver pour. We will be producing this year approximately 3 million ounces, but next year 7 million ounces. And our cost is in the low quartile. So our cash cost is around $7.50. Our all-in is at $10. And we are like a very unique company because we're 100% silver.
So you don't have to raise any more capital in the meantime?
No, we don't. We have 130 million shares outstanding, and we're fully funded, and we're fully funded for the future.
Okay. For the future, when you say that, What does that mean? Are you still exploring, or is it just
We're
focusing
spending
on?
about 40 million a year on exploration, but we're generating about 140 million a year of cash flow.
How's cash?
So we're sitting on about $20 million of cash. We're now, as I said earlier, we poured our first bar of gold. That first batch of processing will probably mostly go to working capital for the joint venture to pay for the mining and the transportation of the next round. But then I think that after the second batch, we'll actually start getting revenue by dividend in the form of a dividend from the joint venture company back to ourselves. So by the end of the year, we should be cash flowing positive to the company, and then obviously we'll look to next year to continue to explore other projects.
So what happens to that money, the money they have right now, as well as the money that's going to be coming in? How do you split it between growing the company, so development, and G&A?
So first order business is paying back the bankers. We borrowed $60 million to get Manh Choh up and running. As you all know, the equity markets have really not been good and not been kind. So rather than dilute our shareholders with equity by issuing more equity, we said, okay, no, we're going to borrow some money from the bank. So the first order of business is pay the bankers off, and then once that's done, we can spend more money on exploration and advancing our other projects. We have a modest exploration program going on this year at Johnson Tract. Next year, we see a modest exploration program at Lucky Shot and at Johnson Tract. And of course, we have ongoing exploration at Manh Choh, which is part of the joint venture budget.
How's G&A for you then right now? What in dollar amounts?
It's a small, as I said, it's more of a strike force kind of a team. We have a total of 14 employees, and we doubled with the acquisition of High Gold, we doubled our employees from 7 to 14, and we're going to stay that way. We're not going to, because we're not doing the mining and we're not doing the processing. We don't have to have the hundreds of people that it takes to do all that, and that's sort of the beauty of our business plan, is we take advantage of the existing infrastructure that the Kinrosses of the world, the big mining companies have, and not only the people, but also the knowledge and the facilities that they have. So, at Fort Knox, it's been operating for 30 years. It's a big mill. They have excess capacity in the mill, and Manh Choh is easy to help out fill that capacity. Fort Knox processes ore that at the Fort Knox mine itself, their average grade is 0.8 grams per ton. Our average grade is 8 grams per ton, so it's 10 times the grade. You'll always make room at a mill for higher grade. So my thesis is, if there's another mining company out there processing ore at 5 grams per ton, and I can bring them ore like Johnson Tract that's almost 10 grams per ton, there's a business transaction to be made there. So that's basically our business plan. Okay. Use other people's mills and tailings facilities. And the main reason is, in this market, it costs a lot of money to build a mill and a tailings facility and a power plant to run all that. It takes a long time to permit things. Average time it takes now to get a mine into production is 15 years. So by not building our own mill and tailings facility, we can cut 10 years off of that. That's a much better business plan, I think, for a junior mining company right now.
What is that going to do to your G&A, to go back to the question? Now you have 14 people. Do you have an idea of how much it's going to cost you to run a company on a monthly basis?
Yeah, I mean, we're running about $5 million to run the whole company.
Okay. So about 400 something grand a month.
Yeah.
How's the treasury right now?
The treasury?
Yes.
No debt and $18 million in the bank.
Okay. What are you going to spend that $18 million on this year? And again, are you keeping that split of exploration to G&A in the 80s or what you just told me?
That's where we've run it. Like, if we look at our financials over the last 4 years, it's been about 88%. And so I would suspect that's going to be consistent moving forward. So we have 3 drill rigs turning. We're in the midst of a 25,000 meter program. We've drilled about 12,000 meters. So we're trying to continue to show the expansion potential. We've had some successful exploration where we've got a geological model that we're validating with some growth. So, to answer your question, we're leveraging that treasury into trying to increase our mineral inventory by making new discoveries.
And more specifically, how much money in dollar amount are you going to spend on exploration, and then how much money are you going to spend on G&A?
It's a good question. It's going to be like an 80-20, on the conservative side, but probably come in closer to the high 80s.
But so all that 18 million you have on the bank right now, you're gonna spend all of that in that 80-20 split.
Yes.
Okay, and that's gonna cover this year. No need for capital raises anytime soon.
Listen, I don't believe you raise money when you need money. I believe, you look at what the business is doing. You want to be in a position of strength when you go out there so you can dictate terms. So we've always, I feel economically insecure when the bank balance goes below 10 million. So, we're at 18 today. We're not in any rush to go do a deal. But to me, what's more important is who's buying. Have they bought into my vision? Do they understand the time horizon, the duration? Are they strategic? If you look at our shareholders, 15% Hecla, 10% Eric Sprott, 48% institutional, 19.9 Fury. So only 8% of the company's in the hands of the public, right? So if I find the right shareholder and we've got the right use of proceeds, maybe we put up a deal at some point, even though we don't need funds for the next 12 months.
How much money do you have in treasury right now?
We have $18.8 million US in our treasury as of the last quarter.
Where is that money going to go this year? What are you planning? You're planning new acquisitions? Is that something you're constantly working on? What's kind of the plan there?
So we allocate capital with multiple methods in mind. We fund our generative work, which is generating new royalty positions. We accumulate mineral properties, add value through data acquisition, illustrative of the prospectiveness of that asset, sell that asset on in exchange for cash and share payments, as well as in-ground work commitments and royalties at the end of the day. That's our core business. That's what we do every day. We've been doing that quite successfully for 20 years. In addition to that, we also buy royalties. We're always looking for royalties to buy, and our astute economic geologists in mineral belts around the world are always looking for royalties that are for sale, that are not going through a sales process. So we can buy those at good valuations. We've got a strong track record of having done that. And then the third thing that we do is make strategic investments in companies where our geologic and engineering acumen says that we cannot not own the stock. And our strategic investment track record is net $55 million, and those monies that we have made from that merchant banking activity are wrapped right back into royalty purchase and royalty generation.
What about G&A? How much money are you going to be spending on G&A?
Our total budget across the entire company in this year is around $17 million, and that's not just G&A. That would include all of our royalty generation activities. And those royalty generation activities are producing about 20 royalties a year.
How much money do you have in treasury now after the recent capital raise?
We're sitting with about 35 Australian in treasury at the moment.
Okay. What is that money going to be spent on this year? Or let's talk about how much of that money is going to be spent on drilling versus how much is going into G&A.
About 50% of the funds are being pushed into development. So the completion of our pre-feasibility at the end of the year on Costa Fuego. Just recently we announced the inception of Wasco Water, all of our water assets going into a separate controlled subsidiary. We also have a pre-feasibility or a business case study being advanced on that. And then we have a port study that we're also co-contributors on to look at a potential bulk concentrate terminal put in place right next to Costa Fuego on the coastline. So a lot on the development side, also a lot of preparations on getting ready for our environmental impact assessment to be submitted to the government mid-next year. That is really the last step in what has been over a decade permitting process for this project. So that's exciting. But the other half of funds are set aside and dedicated towards continued final phases of consolidation in the area and the drilling that we will attribute to those projects that we've been after for a long time. This is what we really consider to be our final cleanup. We have 1 billion tonnes in resources at the moment, 800 million of that in indicated resources, and we have a number of, near-term bulk tonnage open pit opportunities that we see left in the area. So probably stay tuned for the rest of our announcements this year as we look to bulk out our presence in the Domeyko Mining Centre to the south of Costa Fuego and really incorporate that those last elements in. So a lot of drilling set aside, some 25,000 metres to 35,000 metres of drilling set aside, and we'll deploy that throughout this year.
So about 17.5 million you're going to be spending on drilling and developing and all these things.
Between 14 to 16 million has been earmarked.
What about G&A? How much is G&A going to be this year?
G&A is sitting around about 12% of our book value on where our treasury would go, and the 12-month forecast just been put together. We're funded into the back end of 2025 for all of those pre-feasibilities to be completed and for the bankable study to get underway in earnest. So that puts us in a very good position to also assess our strategic funding optionality for what is probably a small final component of expenditure before we're at the financing table for what will be a plus $1 billion mine to develop.
What's a range that you've typically stayed around for G&A in terms of dollar amounts?
We've actually just for the first time split and separated all of our staff into where they're actually being assigned on the various projects, and what that did reveal to us is we're actually running a pretty tight ship, around about 12% true G&A at this point in time. So I couldn't talk to our past performance, but yeah, I think that's a pretty good indication as to how lean we run.
How much cash do you have right now?
So right now we got 18 million US in cash. That'll bring us till, probably Q3 of next year.
Okay. How much of that 18 million is going into the ground, and what are you doing?
So of the 18, 15 is going into the ground. So the major things that is being used for is a really exciting drill program at our Nevada North project. So historically we were operating on a 5-acre permit. So building roads and pads chews up the 5 acres quite quickly. And now we're going from 5 acres to 400 acres. The land package is 23,000 acres. And on the 5 acres, we had 1.3 million ounces and $500 million of net asset value at $2,000 gold. So a big kind of exploration growth story going on in Nevada. And then at our Delamar project in Idaho, we'll have a feasibility out at the end of the year, and we'll continue on the permitting process. So we just got our mine plan of operations deemed complete at the state level, and now we'll be going to the federal level. So it's ongoing lobbying and baseline studies and all that sort of stuff.
So 15 million on development, 3 million on what, G&A, so 250 a month G&A is what you're targeting?
Yeah, like our yearly burn for G&A is about $3 million.
How much money does the company have in treasury right now?
Currently $30 million in the treasury. 10 million of that's flow through that we plan to deploy on exploration over the next 2 years. That'll leave us with about 20 million hard dollars in the treasury by the end of 2026. So yeah, we're doing very well in terms of capital management.
So this year specifically, what's the exploration budget for this year?
So the budget this year is around $21 million in the ground. Around 17 of that is from third parties. So we're a project generator. We come up with the exploration concept, stake the ground, then we generally try to get third parties to spend the higher risk and larger amounts of capital to advance these projects.
What about G&A? How much money are you budgeting for that?
G&A, we're at about $3.5 million a year. We have a very large exploration team. There's around 15 people full-time in the company. 10 of that is technical and operations. So again, we generally try to manage all the exploration that's happening on the projects ourselves, even if that's funded from third parties. That requires a pretty significant team, and hence why a little bit of a larger G&A budget than most exploration companies.
Yeah, but the majority of that G&A is actually towards exploration, so it's technically, so is the exploration team, so it's I suppose...
That's right, yeah, and we do generate revenue through management fees, so this year we have around $3 million coming in, not only through management fees on third-party expenditures, but other sources of revenue, like cash payments and options and interest as well, and...
So you cover G&A with the management fees from the
That's what we've tried to do. Historically, we've actually managed to generate more revenue than our total historical G&A in the company. This company is actually profitable, which is kind of crazy to think about as an exploration company, but we've been paying taxes in Canada, so There's no losses on the books, which is a unique thing to say.
How's the treasury? How much cash do you have right now?
So I think our last public stated balance last quarter, I think we are at about 74 million in cash in the bank, and we are in a very strong position as a company. Our market cap is just over 700 million, and I think being a New York Stock Exchange listed company, being in a strong, having a strong balance sheet, that puts us in a very strong position to get to the key milestones that we're delivering on right now. Number one is offtake. We're going to be announcing an offtake. We've publicly disclosed this to the market that we're negotiating, and we're in the final rounds on the offtake for the nickel, copper, cobalt that will be coming from the Kabanga project. And then we have a partnership with BHP. BHP has invested $100 million into our project, and that is going to result in the completion of a comprehensive definitive feasibility study end of Q3 this year. That's really the main milestone we're working towards, and I think that's what investors, when you look at Lifezone as a company, as an investment, our job is to deliver on the offtake negotiation and get the DFS done on budget, on time, and we're on track to do that.
How much G&A are you going to be running in the meantime on average a month?
I'd say what's publicly available for me to disclose, it depends because we have a compensation program that's running right now, so it'll skew on a monthly basis, but that's actually a very important highlight because we have finished compensating all the community, which is a big milestone for this project, and that was about $14 million over the past 6 months. In terms of running costs, we're anywhere between, probably averaging 1.5 to 1.8 per month in terms of our operations.
How's cash? What's your treasury look like?
We've got about $15 million left on the balance sheet, which is enough to deliver all of the work streams that we've got going on this year. Next year will be about accelerating towards production and doing the detailed design and engineering, so we'll need to raise a little bit more money before the big capital raise to actually build the project.
Okay. Off that 15 million, how much is going into the ground and what's G&A?
We're actually very light on G&A because we don't have an office outside of Chile. We only have one or two members of the management team outside of Chile, so we're about $1.5 million a year on corporate G&A. That's really listing costs, management costs, my salary, etc. In terms of actual money going into the ground, well, the rest of it's being spent on technical teams, geologists, all of the things that are required to move the project forward. So it's probably 90%.
Okay, so 13.5 million in the ground, 1.5 on G&A. What's the treasury situation? How much money do you have in cash right now?
We've got over 20 million Canadian dollars in cash on hand. We just did a very successful raising in April of this year. Our share registry is populated by some of the largest funds in the world. We have groups that have got plus of 1.x trillion under management. We fit in their copper and gold portfolio or their land TAM exposure.
Where is that money going to go into this year in terms of putting it into the ground versus spending it on G&A? What's going to be that split there?
We put most of our capital into the drilling program and the current ongoing pre-feasibility program. Of our G&A, which is say circa about 4 million a year, about 1.5 of that is actually administrative costs, lawyers, issuer costs, insurance. The other balance, I'd say, of that, say 2.5 million, over 50% of that's actually at the project level cost, but it's accounted for as a corporate expense.
How's the cash situation right now? Treasury, how's that looking?
So as of the last quarter, which was when we last published, 27 million Australian dollars.
Okay.
It would be around 17 million US, I suspect.
Okay. Where's that money going to go into in terms of growing the company versus spending it on G&A? What's that split going to be?
So I suspect that we spend about 60% in the ground in Brazil. So our project's in Brazil. And we've always been a very company that's focused very strongly on putting our money on the drill bit. So exploring, growing the resource. But this is a development project, so also completing the scoping study, which we've just done, moved straight into a pre-feasibility study and looking at pilot planting and laboratory and a whole bunch of other stuff. So we put our money into the project, yes.
Right. Okay, so that 25 million that you have right now, 60% of that is going into the ground. Is that going to be enough to finish all the work that you're hoping to do this year?
No, it will not be, and at some stage we'll be looking for some more capital, but not necessarily through the equity capital markets. We believe that there's enough strategic interest in the size and grade and importance of this project, given the Chinese dominance of the entire rare earth industry. We think that we have come to the attention of the European Union, the US government, and certainly some import-export credit agencies, etc. So we're certainly looking to take on some non-dilutory funds. In fact, I've been in Washington for the last 2 days, so having some really good meetings about a way forward and a partnership there.
How much money do you have in cash right now?
Approximately 21 million Canadian, no debt as well. So that's for a prospect generator. That's a good amount of money. But we're also a royalty company, don't forget. So we have active revenues that continue to feed that. We're profitable, and so we continually go up in that amount. We're earning more than we're burning.
So revenue is going to cover G&A this year?
Yeah, we expect that on the royalty side of the business, we'll probably generate between $5 to $6 million, that's Canadian dollars. And we'll do around 1.5 million in terms of our prospect generation business too, which is profitable in its own right. So we expect, last year we had revenue or net income of 1.8 million. Not exactly sure where that's going to pan out this year, but we expect to have a sort of a similar situation as we did in 2023.
So the 21 million that you have in cash right now, that's owed to grow the business. Where is that going to go, that 21?
So we have some that goes into early stage prospect generation, but as I mentioned, it's a pretty nominal amount, and we recover those costs for the transactions that we do. With respect to the other part of the business, in terms of looking at royalties and royalty acquisitions, we are always on the hunt for new opportunities. We aren't the type of royalty company that's going to go and take sort of half that treasury or all that treasury and put it into 1 or 2 royalties. We tend to spread the risk. We acquire early stage, not only projects, but early stage royalty opportunities. And so we minimize our risk. Obviously there is risk with every royalty that you buy, so we don't invest in things where a failure would actually hurt us. So in a sense, it's kind of like buying a lottery ticket. You do as many of these transactions as you possibly can. If one steps forward, great, but if one fails, it's not going to put the company at risk. So we try to deploy our capital on a very nominal basis, but we're always looking for that value opportunity, that opportunity that's going to create significant leverage to value creation. That's the big thing for us. They're hard to find, though.
Let's just talk about what's happening at Rackler right now. How's your cash position?
Cash, I just closed the financing for Rackler, so we've got just over, we had just about 5 million in the treasury before we started drilling about 3 weeks ago. Drilling is very expensive in the Yukon, but the prize we're chasing there is multi-million ounce gold deposits. So today, right now, we're on hole, we just started, we're on hole 2. So we're trying to find intersect a rig system, which is reduced intrusive related gold systems, which are usually very large, open pitable, simple metallurgy, hosted in intrusive rocks. Kind of similar to Snowline's discovery, which I think now is at 7.5 million ounces, which is about 20 kilometers away. So we're in the same geology, chasing the same style of system. We had last year we put some holes in and got some, reconnaissance holes and got some good indications that we're in a rig system. This year we're going there drilling, trying to prove it up.
What percentage of the 5 million that you just told me about is going to go in the ground versus how much you're going to spend on G&A?
Well, 4 million into the ground this year. Okay. I mean, this year and next year. I don't know if we'll spend it all this year or not. Depends on the program. If we start seeing great results, so good sheeted vein systems in the drilling, we will bring in a second rig. But of the money we raised, 4 million was flow through, so that money is all going to get spent in the ground, and probably some of the hard money we raised, which was about 1 million.
Okay, so what are you planning for G&A? Like, how much are you going to run a month?
$500,000 for the next 12 months on that company.
But it's cheap. Why?
Because we share G&A between 4 companies.
That makes sense.
Right, and I don't take high wages, so I'm the manager of all the companies. So my salary gets split between all of them too, and often it's just in shares.
How much money do you have in the treasury now? You said over 5 million. Is that going to be filling up throughout the year because you have revenue, or like how does that work?
Yeah, so Riverside's a prospect generator, royalty generator company. We have partners working on our projects. We have over $4 million of partner funding work in all that we're doing in exploration. We're working particularly in Mexico with Fortuna Silver, spending over $1 million with our drilling and other partner drill programs in exploration. Ourselves, we make about $1 million a year of income and all over, and we spend about $2 million. So overall, we've spent about $1 million burn rate each year for the last 15 years.
What's that burn rate going into the money that you're spending?
Into exploration, into new projects. We've continually developed 4 to 5 new projects a year. We get through those projects. Over the last 17 years, we've worked through 74 projects, but only put out 75 million shares. That's a pretty remarkable record to do as a company.
So what are you running for G&A this year?
For G&A, we run about $800,000 total spend, including investor relations, all marketing and everything. And most of that then is put into the ground. With the other spending we're doing is in exploration and drilling.
How much money do you have in the bank?
So we've raised in the last 3 years in a real tough market, $75 million in all-in bought deal financings led by BMO, SCP, who are here, all of the big banks, 8 Capital, Echelon, all of Toronto, and we've taken that money and driven the project to where we are. But I think it's really important who gave us that money. That $75 million in bought deal financings came from, we think, the smartest institutional precious metals investors in the world. Franklin Templeton, Van Eck, Sprott Asset Management, Merck out of San Francisco. So we've been trusted with the smartest money in the space to take that in a very tough market for the last several years to raise money. We had no issues. And drive our project to the point where in July or August, we're going to deliver our feasibility report, PFS, that is what we'll use to build the first phase of our mine.
What are you doing in that regard, as in, do you have to drill a whole lot more infill? Are you doing any step outs?
We've spent, since I acquired, I'm a securities lawyer by training, so to get this asset, we acquired another public company in 2017, and basically delisted that, took the asset. Since then, $125 million, a couple of 100,000 meters of drilling later, we're all done. We are an economic deposit. You can see all that on our website, and we're getting ready to build the next great silver mine.
Right. How much is G&A for you right now?
Our G&A probably is, it's quite, we're very proud of the fact that, let's just say of that 125 million, over 95% of it went in the ground. So you can work back from there. We're really a very lean company. We have a lot of contractors and people who work in Mexico, but head office, we've got 2 people in our office in Canada, and that's the way it should be. We're a Mexican company. All of our employees are in Mexico. We have the management part here is me and my CFO, and basically what we are is we're the fundraising arm. We go to the institutions all over the world to get that money to drive that investment into Mexico, where our real business is.
Right. Are you sure with Devin in the picture it's not 2.5 people?
Devin is now still living in Mexico, so I don't class him. He's basically, with Devin, who's doing our biz dev, Devin is a mining engineer, and Devin serves as 2 roles. He's on the mountain half the time, down there with the drill rigs, with the team, and then when I need him to come and support me at these kind of shows, he comes here, but he lives in Mexico.
So no, where I'm getting with this is no need to raise capital, G&A,
right
everything's
now
covered.
we've got about, on our last quarter end, we had 9 million left. We've done all the work. Now it's just a bench study to come out. You know, we want to have our PFS ready to show what this project will look like economically, and we can build on that for Beaver Creek is the big show coming up, and Denver, and really no big expenditures to then. But let's face it, we want to, as soon as we get through that, we're right back to work. We're going to add ounces. We've already added a couple 100 million silver equivalent ounces here. That's just getting going. So yes, we're going to raise money at some point, but no need right now, and it's a nice place to be.
How much money do you have in cash right now?
We're sitting around 50 million Australian dollars.
Okay. What is that going to get you?
We hopefully will get to the finish line of a definitive feasibility study. We're in the process of that. We are busy with a pilot phase, mining and rehabilitation program. We're mining about 150,000 cubes of material at the moment, and so that'll take us to the end of 25, more than likely.
Okay.
Rio Tinto just exercised options which they had as part of an investment agreement with us 12 months ago. So they own now just under 20% of Sovereign.
What about G&A? How much money are you spending on G&A this year?
Possibly about close on $3 million. Yep.
Okay. That's all part of the cash that you have right now. You don't have to raise capital up until 2025 for nothing else.
We don't have to raise any capital.
How's cash right now?
So we have $44 million Canadian on our treasury at the moment, so we're well cashed out.
Right. how much of that money is going to go into the ground this year?
So we're currently drilling around 50,000 meters of underground drilling. So a large portion of that, probably half of that money at least, will go into the ground. There's both underground drilling and underground development to develop down into the system so we can set up the drilling. So the majority of the money will go into that.
Okay. And how much are you budgeting for G&A this year?
G&A over the whole year is about $3 million.
$3 million? So about 300 grand a month, give or take 250?
Yeah.
Okay.
Small G&A. We're a small team. We've just been in place a year, 12 months. We bought the asset June of last year, closed the asset, so we're new, and we're doing development. And our focus is, my philosophy has always been to support the teams on site. The corporate supports the team on site, not the other way around. So keep a small corporate team, very tight, who work with the site teams.
So to kind of sum it up on Regulus, the unanswered question here would be, can we find a suitor for this thing to sell it as quickly as possible? And for Aldebaran, the main unanswered question would be, can we grow what we have and find someone after that?
Exactly. Our strategy overall is once we have the project, we demonstrate the full size of it through drilling and a series of mineral resource estimates. With Aldebaran and the Altar project, we're still demonstrating the size. It's already a large enough project to draw interest, but the drill results we've put out in the last 2 field campaigns have been pretty eye-catching. We'll do a new resource estimate in about November of this year, which I think will surprise the market as we move forward. And that'll put us in a position for the first PEA on the project in the second half of next year. So we're still in that process of showing the dimensions of the project and revealing the value of the project. So we're about midway through our process. With Regulus and the Antiquary project in Peru, we've largely defined the project, but we have about 1/3 of the deposit. The other 2/3 of the deposit belong to a joint venture of 3 companies working next door. And so majors can see the full prize on it. It's a little difficult for us to reveal the full potential to the market. We're working with our neighbors to see if we might be able to do that a little bit better. But there are a number of different scenarios that could play out there. The neighbors could decide to acquire us to move the project forward. A larger company could decide to acquire most of us that are involved in the project moving forward. So we're in that kind of dance right now to see who will be the logical developer of the project. It's quite a very interesting project. I wish I could show the full potential of that project to the market. Big companies that go under confidentiality can see that by reviewing all parties.
I just had about a gallon of coffee, so I'm feeling kind of positive. Let's maybe take it on the positive side and talk about what if you answer those questions positively. What do you think that makes each company worth versus what it's trading at on the stock exchange now?
In both companies, it's hard to put an actual value on that. But one way to take a look at companies like ourselves is we can look at the typical price that is paid to acquire a project like we have. And when you look at the average acquisition price for major undeveloped copper deposits that are held by juniors, purchased by majors, including our first company, they typically sell for about 1% of the in situ value of metal. So today's price is about 4 cents per pound in the ground. Both of our companies are valued at about 1 cent per pound in the ground right now. So there's a lot of room to see an increase in valuation in the companies. And particularly with Aldebaran, it's really more of a double-barreled opportunity because as we de-risk the project and move it through PEA and pre-fees, we anticipate we'll see that valuation increase, but we're also going to increase the size of the deposit at the same time. So there's a lot of leverage on that project. So multiple X values for both companies to move in the range of the typical average price that have been paid for acquisition of similar projects. So a lot of upside, but security that you already have a solid project and a pretty good market cap for both companies to start with.
Well, what you're seeing, if you see what you want to see, basically, if you answer the unanswered question positively, what would I make this project worth versus what it's trading for in the stock exchange?
Yeah, I mean, honestly, I feel like just our deals with Nevada Gold Mines probably is the majority of our market cap at the moment. We're trading at about a 17 million market cap, and we're seeing, by the end of this year, we'll have seen almost 20 million Canadian spent on those projects. So that, I believe, is really the primary driver for the market cap. So if a project like Big Blue, you look at that rock right there, it's pretty good looking stuff. We go and drill a good porphyry hole there. It's an absolute game changer for us. I'm not going to speculate on exactly what that stock price would do, but look at Hercules Silver. They went from a 30-cent stock to $1.50 in a 3-month period after drilling that big drill hole in Idaho. that's the kind of potential that we have to do at Big Blue as well.
Right.
Yeah.
So it's really finding the extension to that main Jack deposit. So Jack is that new high-grade zone that we discovered in 2023. We ran geophysics. Up until that point, all of the drilling historically was focused on the main deposit called Oculto. And so there was very little drilling done outside of Oculto. And so Jack is this new high-grade area just to the southwest of Oculto. We discovered that has exceptional grades, over 200 grams per ton of silver near surface. And so we're looking to continue to extend Jack, which is open in a number of directions. Sort of to the northeast it's open, and also to the southwest. So we're drilling to extend that high-grade zone, and then looking for additional Jacks as well on the property. And so looking for high-grade deposits here outside of the existing resource. So it's entirely step-out drilling, which is obviously very, very exciting.
When you answer that question, let's assume it's a positive answer and you say, yes, we have what we're looking for. What do you think that's going to do to the value of Abra Silver versus what it's trading at on the stock exchange today?
No, great question. I mean, so Jack itself, which we discovered in 2023, added north of $100 million to the economics of this project. And so we're looking for something similar. So we're doing an $8 million investment here in exploration. We're expecting it's going to add multiples of that. And so looking for high-grade extensions here that could add $100 million plus to the overall net present value here. And then we're also targeting other zones that we have, sort of regional exploration properties at Diablilos. And again, that could be a game changer. So there's blue sky upside here. So looking for a very high rate of return on our exploration dollars.
Well, it's really exploration. You know, we're still in early exploration discovery. We do have a small resource on high-grade breccias. There's plenty more of those to go. In fact, the very first news release we put out was a successful test of a new breccia pipe, very similar to the previous breccias that we drilled in the past, high grade, right at surface. We know that the breccia pipes are vertically extensive, so they were shallow holes just to confirm grade, over 1% copper, good strong credits for gold and silver. That's another breccia pipe that needs to be drilled out. We then moved on to drilling in the mega gold target area, and that's a giant gold anomaly in soil. It's about 2.5 square kilometers. We put 8 scout holes in that. We just released the first 3 drill holes from that program last week, and extensive alteration. You know, we've confirmed that we're in a very, very big hydrothermal alteration system. We've got sniffs of high grade. You know, we hit an intercept with 11 grams gold. We had another intercept with 1.8 grams gold and 0.35 copper. But broad zones of anomalous gold. We're also seeing chalcopyrite and molybdenite in all the drill holes, extensive alteration. So it's very encouraging at an early, scout drilling stage to see that kind of extensive alteration and anomalous geochemistry. We also drilled 3 holes in a high sulfidation epithermal system, which is a higher level lithocap type of environment. It had known high-grade silver right at surface. We've got 3 holes into that, defining the structure, and we're seeing lots of sulfide mineralization on that structure. So we're excited about the results, and I think, the main focus this year is exploration, and then identify new discoveries that need to be drilled out. Then we'll have resource drilling, and our goal is to have an updated resource in 2025.
So when we devised our strategy for the year, it's multifaceted, and there's just to go quickly, there's metallurgical assaying, there's historical drill core assaying, and then there's the drill program. With the drill program, it's going to target new kilometer-long targets and potential areas that we think could be a starter pit. So that's where the first shovel is going to go. But if you were to step back and look at that, the drilling's really to demonstrate 2 things, and scale and something economic. Unfortunately, we don't have a nearby mine that we can look to for cost comparables. If you made a discovery in Red Lake, Timmins, Kirkland, these very prolific, mature belts, or in Reno, say, or Nevada, you can look at the nearby mine, take their cost inputs, so on and so forth. When you're a little bit further afield, yes, you get access to large scale opportunities, but you there's the investors question, okay, what's the grade that you need to be economic, or what's the economic threshold? So what we're going to do with this year, we know generally speaking, if something's heap leachable, it tends to be a lower capex. Demonstrating scale, so the strike of mineralization, is it at surface? So these are the things we're going to tackle with the drill bit, is new discoveries, mineralization at surface, and some potential higher grade portions of the gold system that we're tackling.
If that answer comes back positive, what do you think that does to the valuation of the company? Like, how much do you think a company is worth having that answer?
Well, that's definitely a loaded question. How much do I think that? So the economic thing or the metallurgy? Which one were you referencing? Just
Economic thing.
Yeah. So I mean, well, obviously, I think no one doubts the scale of our project. And so the economic thing, it's really going to be driven by the drill results, the metallurgy, that whole sort of combination, and whether or not the market recognizes it or not is up to anyone's guess. But a major mining company or ourselves or our sophisticated shareholders will take notice. I think currently, as probably everyone in here, they think they're vastly undervalued, but I definitely think we could see anywhere from I'll be conservative, a 3 to 5x if you can demonstrate that. There's some multi-million ounce numbers being touted already by an analyst, an independent analyst, by some shareholders, what they see. Now it's about wrapping economics around that. And I always say, finding 5 million ounces of gold is phenomenal, but finding 5 million ounces of economic or mineable gold, that's where we want to get. Not every ounce you find is mineable. It doesn't make it in the pit, refractory, there's a whole other slew of scenarios. So that's kind of what we're shooting for.
So again, going back to a burner, the system defined at the moment is expressed over a 7 by 2 kilometer area. So it's a big area, big target. What we are looking to do is to find a multi-million ounce discovery. So we've had some very good early results in the last 2-3 years. The next 12 months, really, we need to define the key mineralization which will underpin that resource. So we'd like to be in a position of coming to market with a resource in 12 months, maybe 18 months' time. Our intention is to do that when we are very confident that it's a multi-million ounce discovery. So we won't be doing anything before then. We're going to carry on focusing on drilling, defining this system. At some point, we will look to try and accelerate that, potentially bring other rigs to site, and really try and define this main zone of mineralization.
If that answer comes back positively, and you find what you're looking for, what do you think that's going to do to the valuation of the company versus what the stock is trading at on the stock exchange?
Yeah, so at the moment we're just over $1 Canadian dollar per share. We have about 90 million shares. So the market cap is just shy of about 100 million Canadian. If you look at some of the comparable transactions in Africa the last couple of years, companies such as Asino and Allcorp as well, typically the valuations on these multi-million ounce discoveries have been sort of 2, 3, 4 times the current level that we're at. So I think we would be hopeful we could get to that sort of level. We're an exploration company, so we're not necessarily going to be minded to put this into production. If we can deliver a multi-million ounce discovery, we think there'll be buyers in the market for that, and there's been a good track record of assets sold in Africa in particular the last 2 or 3 years of this sort of size potential.
Yeah. What kind of prices are we talking about? Price range? You don't have to be specific, but a range maybe?
Well, again, if you look at your sort of comparable projects that are 2, 3, 4 million ounces, you're looking at 2 to 3 to 400 million Canadian dollars in terms of the transaction size. So that's the comparable transactions for those advanced stage assets. So we don't think that's out of line for Alpha in the next 12 to 18 months.
It's all about drill. We're drilling 150,000 meters. We have 16 drills turning, and it's all about discovery of ounces.
Well, talk to me about what you're targeting, and maybe more specifically, like, what is that going to do to the valuation of the company?
When we took over this company, we had 10 million ounces of resource. After 2 years of drilling, we had 100 million, and another year later, we have 450 million ounces of resource, and our goal is to bring that above $1 billion.
1 billion ounces of silver?
Yeah.
What do you think that's going to do to the valuation of the company relative to where it's now?
It will help.
To put it mildly, you're being scarce with the words.
Well, no, but it's talking the stock price. It's you can never win. It's a question of the silver price, of the market. It's very difficult to predict. But on a per ounce basis, we're currently valued at $4 an ounce. If you go to 1 billion ounces, it's $4 billion, so it's $30 stock price.
How much are you running for G&A specifically?
$5 million US a year.
Okay. And that counts for everything,
Yep.
Staff, everybody? Okay.
Absolutely.
I mean, it's always permitting. So we're permitting the access road to get to our underground development at Johnson Track. We should be we should have permits to do the road construction by the end of the year, and so we're working on that. But that's an unknown right now. We don't have the permits to do that. The plan is to do that work next year. So get the permits this year, get everything then lined up. Get your plans and your contractor all lined up to build the road next year. But then it's usually permitting. It's usually always the biggest question in mining is because once you have the permit, then you're going to actually execute. Right. And the permits, it's not in your control because you have to ask permission from the permitting agency. In this case, it's all the state of Alaska, so it's on private land. That does make it a lot easier. It's on land that's owned by Alaska Native Corporation in the case of Johnson Tract. In the case of Lucky Shot, it's private land that we own. So actually, it should be technically the underlying landowner owns it, but we have the leased rights to mine it. In the case of Manh Choh, it's private land owned by the Tetlin tribe. So I think working on private land, working on state of Alaska land, relatively easy to work on those lands. Federal lands, we just don't work on U.S. Forest Service and BLM lands. Federal agencies are too difficult to work with, and so we just don't do it.
What I'm looking for, and this will not surprise you, but what I'm looking for as an investor is upside. Answering that unanswered question positively, if we assume you do so, what would that do to the valuation of the company relative to what it is right now?
Well, I think we're trading at a discount to our projected cash flows. We just poured our first bar of gold, so we need to pour a second and a third and demonstrate that track record of production, which I think we should be able to do by the end of the year. We'll have 3 batches between now and the end of the year, or maybe it spills into January. Once you establish that track record of cash flow, I think we'll be re-rated to on a cash flow basis. 7-8 times cash flow is a sort of a typical valuation metric for a cash flowing company. So I think that would be a starting fair value, and then once you've got that cash flow, you can say, now I can, without any further dilution, I can add Lucky Shot by executing this plan. I can do the same thing for Johnson Tract, and so I can when I can convince investors that we can go from producing 65,000 ounces of gold a year to a couple 100,000 ounces of gold in 5 years by executing our plan, and that is our plan, people then will start to give you value for that. So that's the business plan. We have a 5-year plan to do that. Leverage off of our Manh Choh production, pay the bankers off, explore and develop our 2 other key cornerstone assets at Lucky Shot and at Johnson Tract.
So there's many unanswered questions. I've got 3 buckets. Number 1 is growth, exploration. So we have a 15-kilometer trend. We believe every kilometer and a half there's another deposit. We validated that with our first round of results. We hit Moose, we hit Chance, so we're showing that there's a very, very, very large silver system here. We know it's 150 million ounces silver EQ. Can it be 200, 250, 300? So by showing that growth, that's bucket number 1, exploration growth. Bucket 2, we have something called the Wolf deposit. We are trying to delineate a resource, and we're trying to continue to grow and expand it. So that's a very specific allocation in this budget. And then the next one is, last year, we hit a very exciting new gold discovery. So in the Golden Triangle, projects like Premier, SK, Bruce Jack, they start as silver deposits, and then as you get into the heat source, you get into really big, high-grade gold systems. That's what we tagged last year up at Homestake. So bucket number 3 is seeing if we can build tonnage at that new gold discovery where we drilled 12.5 meters of 79 grams of gold.
Is some of that money that you're going to be spending on this year, is that going to go towards a name change to Dolly Varden Gold and Silver?
So right now in our resource, we have 64 million ounces of silver and 1 million ounces of gold. So 64 to 1. Now with a current 77 to 1 silver to gold ratio, if that ratio changes, to answer your question, we have 64 times more silver than gold. So I'm pretty sure we're confident in keeping the name silver.
Right. Okay, let's talk about what happens if you answer that unanswered question positively. So if it comes back and it says, Sean, you're right, what does that do to the valuation of the company? How much is it going to make it worth versus what it's trading at in the stock exchange today?
Great question. So if you go back a few years, we were trading at 40 cents an ounce in the ground and we had 40 million ounces. Today we're trading closer to $2 an ounce in the ground and we've got 140 million ounces. Where I think we're going to go is a $4 an ounce valuation minimum, okay? The question that I want to know is how many ounces will we have when we get there? At 200 million ounces, that's an $800 million company. You know, at 250 million ounces, it's $1 billion company. So let's see where the drilling gets us. Now, that's assuming like silver is trading higher today than when we were trading at $4 an ounce in the ground in August of 2020. So my $4 in situ value may be conservative, and my 250 million ounce target may be conservative, but we'll see when we get there.
How are you growing this company? What's a problem that you're maybe solving using that money? Just like how it is with the...
Yeah, so another allocation of the money that we have coming in the door, and please keep in mind we have very strong cash flow. Last year, we had $37 million coming in the front door. That was a record for us. And then coming back to your capital allocation question, we allocate money to the royalty generation side. We allocate money to royalty purchases. We're also allocating money to buy back our shares. We have some key assets within this portfolio, including our Timok royalty and our Caserones royalty. Those are generational copper assets. We're very proud of those. It's difficult to find that quality of an asset out there in the world to buy today, but we can get it by buying back our own shares. We believe it's a smart thing for us to do. So we do have a normal course issuer bid in place, and we have been buying back shares daily now for a while.
I think that probably there is a great expectation that we will pull the veil on what the value proposition of the potential water business, Wasco Water, is to the company and what that represents. You know, that is really an interesting thing to have a company always looking at its funding optionality in terms of new equity that it can raise by issuing shares, as we've just recently done, or diluting at the asset level either through royalties, which we've had a Cisco Gold Royalties investment last year in the company, but also at the project level. We started as a single asset focused company on a copper project. That is what we still are focused on, because we think that the oncoming copper price represents a huge leverage equation to that asset that is already something that will generate $850 million US of annual revenue over a 16-year mine life. We'll see whether that can be lifted in the pre-feasibility at the end of the year, but also in the fact that now we're talking about a separate subsidiary, Wasco Water, holding all of our water assets, that potentially has the keys to supplying both salt water and desalinated water to the Wasco region. And so that additional asset value being on the table for Hot Chili gives us more optionality in how we think about strategic funding going forward, not just for the final bankable to be paid for, but what that might represent in terms of early seats at the table for project financing. So that's unique. Not many juniors can target billion-dollar projects to be built, looking at the equity component of that build being multiples of what the market capitalization of the company is, and most people don't have an answer to that question. That's the biggest question that most juniors have to answer. And so for Hot Chili to have potentially that answer through Wasco Water is extremely unique. I don't think I know of any other mining developer that has something like that in its story.
What would it do to your valuation more specifically? Are you targeting a certain dollar amount that you say, oh, that's going to make the company worth X? What would that X be?
Yeah, I mean, you can always play that game. You know, doing project funding is often a marker as to what value pointers there are to the market. Asset transactions at the asset level are often at PNAVs that are many, many multiples of market capitalization or share prices in this current equity environment. So that's often a good methodology for a company to be able to lift the share price. And that's why share prices lift to take over prices that are indicated in the market. So the same effect can occur there through funding at asset level at multiples of what the market capitalisation. We just have the opportunity to do that on our copper project, as most people do with their own resource projects, but we have a second critical resource offering in a water business.
So if I bought the stock today, what might I hope to be making on this on this investment?
Look, I would hope that we would be sitting in a few years talking about the great copper price re-rate that we saw iron ore re-rate, we saw lithium re-rate at 10x plus, and that I don't want to jinx copper's chances. Everyone wants to be conservative and talk about whether copper can go from $4 to $6 or to $7, maybe even get bullish and say $8. We've seen examples of where large metal markets have done 10 times, and to think that copper, for some reason, isn't able to do that, I think would also be naive. Certainly we see a great future for the copper price, particularly going into the end of this decade, where there will be a great inelasticity of supply response. When needed, the copper will not come, and that's because if Hot Chili is one of 6 projects holding a 100,000 tonner or greater outside of the majors, there's not a lot of options for the world.
On the exploration side is where is the fluid coming from? So we have this nice disseminated cap. These low sulfidation epithermals form like mushrooms. So fluid migrates up the stem, it hits a more permeable horizon, and you take off lithostatic pressure and it drops the gold out. But finding the feeders is key. That's where you're going to have, ounce plus material. So answering that, we're getting very close to that.
Okay.
And for the feasibility is really just dialing in our strategic mine plan to optimize the cash flow.
If that answer comes back positively and it says, Jason, what you were looking for, it's here, we know where the fluid is coming from, what is that going to do to the valuation of the company? How much more is it going to be worth than what it is today?
I'm not a speculator, but I can tell you, you put a brand new discovery hole into some bonanza grades, 800 meters away from, 1.3 million ounces, I would imagine it'll have a very, very positive impact to our share price.
Yeah, so there's lots of things happening. Our flagship asset, again, is the royalty on the Frotep project. We've just started engineering and baseline studies for a decline there. We're looking towards a maiden resource by the end of next year. There's going to be one other big drill program in the first quarter in 2026, so that's obviously a big milestone. But exploration-wise, we're doing a lot of greenfields in Ontario this year. The South Uchi project, which is 100% owned in the Red Lake district. We've gone in and done intensive prospecting and geochemical sampling, hopefully getting towards a drill target there. And we'll see what that looks like. We believe we're onto another potential discovery there.
If that potential discovery is there, what do you think that's going to make the company worth versus what it's trading at on the stock exchange today?
I mean, that's a difficult question to answer. It depends on how significant the discovery is. Likely we'll be bringing in a third party to fund the really expensive part, which is usually the drilling on these programs. So what the end result deal will look like will also determine what the outcome is in terms of value. But it's really hard to say in terms of exploration. I
typically go around asking the companies for their unanswered question. What's the main thing you're answering? You just told me that's your offtake agreement. Mm-hmm. One of it is your offtake agreement. What do you think that's going to do to the valuation of the company if you answer that question positively? What is it going to do to the valuation of the company versus what it's trading at right now?
Mm-hmm. Well, I think there are big expectations from our investors and from the market that we would deliver a very robust, very strong caliber offtake agreement. And I think we're poised to deliver that in the coming months. Importantly, the DFS, we have a pretty well mapped out equity story, because at the conclusion of the DFS, BHP has an option to invest to go from 17 to 60%. And they have the valuation formula is at 70% of NAV. So BHP invested, and our stock's trading just around where they invested, around 0.1 to 0.2 times NAV. So we have a defined investment metric coming up that investors can rely on. So investing in Lifezone right now, on the DFS, we have a formula for BHP to come in and take that majority control. And again, as I said before, if we deliver as management, we've given people a clear pathway to get into the investment now, and we have that metric, and they can do the math on the share price of where that should be, when we include DFS and the offtake.
What do you think that optimizing your processes and improving the way you mine, what do you think that's going to do to the valuation of the company? You just said you think you're undervalued because you're at, 80 million market cap. Improving that, getting to 250 million, as you just told me, what is that going to do to the valuation? Where can I expect that to be in the next couple of years?
Well, let me make it super simple. Campo Morado, we do two concentrates. We do a zinc concentrate and a copper bulk. Let's say a not clean copper concentrate that has the lead and the gold and the silver. Going forward into the end of the year, we're going to have a clean zinc concentrate, a clean copper concentrate, and a lead concentrate. So the payable for all the commodities we're going to go higher because we're going to be paid on a third new concentrate at the end of the year, which comes out of optimization. And to just show what the team has done and in a very incredible way, our recoveries for copper since we initially got involved in the company are over 100%. So initially we're in the 30s, now are on the 75, high 70s. So all that goes to the bottom line because basically for the same cost, you are recovering an extra 100% plus on the same commodity. The same for zinc. Zinc, it was already reasonable. It has increased maybe 30% since the team took over the operations. And again, we're going to go into a third concentrate, which we are not being paid for now. No. So optimization means making more for the same and reducing your cost. That's the way you optimize. In the case for Tahuehueto, it's a brand new mine, and as you are building a new asset, things happen. In mining, as you know, things always happen. So our focus there, because it's a very easy mine, is to continue reducing our cost. So going forward, our goal last year, our all-in sustainable cost was maybe $1,400. Our goal is continue going down on the cost and increasing the revenue. So that's what I meant by optimizing.
Okay, but what is that going to mean for the upside? Like
what
kind of upside
what
can
it's going to mean is next year, again, $80 million of potential free cash flow at the mine level, which if you compare to the small market cap, which is 80 million, and a very long mine life, the NPV of both projects should be over $500 million. And again, fully permitted, all the capex, producing, exploration upside. So if I'm biased on my answer, but at the end we invested because we knew our average cost maybe is 54 cents. We knew that this could be an easy $3-4 stock, no? And the risks were very balanced on the upside. So you always have downside. I basically share as honest as I could the risks, but I think the substantial upside offsets the potential downside. And if the downside happens, I think it's just a momentary downside, which I should say, I mean, we're very focused on no accidents, very focused on safety, very focused on the environment, very focused on the community, which are the main risks because everything is there, everything is built, we're producing, so everything is there now.
Well, I think the critical path for the project today is permitting. So what we're focused on now is submitting our permit application at some time in the next 4 to 6 weeks. That will then allow us to obviously build a project. So the second part of it is definitive feasibility study, which is where you really tighten up the engineering so that we know what we're going to build, what the cost of that's going to be. And then the third prong is exploration. Regional exploration is really the value creator for this company. That's how we started. It was a greenfields discovery in 2016. We have an amazing exploration team and we're focused back on the original value creator for the company.
What are you looking for when you say exploration? It's step out, I'm assuming, from what you have right now, so talk to me about that.
Some of it's satellite targets to the Marimaca oxide deposit, so we're looking for complementary resources for this deposit so we can use the same infrastructure that will be built for developing this project, just expanding our mine life. But we also have a regional exploration target called Sierra de Medina, which is a very different scale of opportunity. It's a much larger scale opportunity. Yeah, it's two different aspects. One is the big prize and the other is very complementary resources to the Marimaca oxide project.
What would success look like in terms of creating value or maybe pushing the stock price up? If that unanswered question comes back with an answer that's positive, what would that do to your valuation?
Well, I guess in 2020, 2021, we set about exploring to find more more pounds in the ground, and we doubled our resource. In terms of the final NAV per share that we will deliver, it's virtually doubled the value of the company. Our objective is very much to try to have that kind of success again. So it could be significant, and we're already significantly undervalued, so I'd expect it to have a quite significant impact if we're successful.
What would I mean, quite significant? Are we thinking a couple of doubles, one double? What do you think?
The second part is we're also going to be moving towards production, but the internal target that we have for the Sierra de Medina is 200 million tonnes at 1% copper or thereabouts. That is more than double the resource that we have now. So that gives you an idea of what we're aiming for.
Certainty. We're increasing the certainty of the deposit. So we're taking a PEA has a plus or minus percentage of accuracy. The PFS shortens that variation, and it's also what we're doing is preparing the data to launch into the feasibility study.
When you answer that question, if it comes back positively and says, okay, the certainty has increased, what do you think that does to the valuation of the company versus what it's trading at on the stock exchange right now?
We're trading about 0.15 NAV. I expect to see a multiple growth in our valuation. Most importantly is we started with a very low risk matrix on this asset to begin with. So what we're doing is taking that very low risk and converting that into certainty. This is what we're intending to do. Certainty of production.
So you're trading at 0.15 NAV. What would that, getting to that certainty, what would that mean for that ratio there? How high could it get?
Well, we've seen comparative projects in Brazil gone from similar 0.15, 0.2 NAV, and they're now trading up to over 1.3 or 1.35 to NAV. We are very much representing a dynamic and a new metallurgic belt in Brazil. But most importantly, in comparison to other groups that are operating in Brazil, particularly in the north and the Amazon, we don't have NGO risk because we're down in the southern part, the southwestern part of Brazil. So that's again a key element of risk.
Well, I think the feasibility study and the economics of the deposit, really. So we've just, in the last week, announced our scoping study, so a very high-level study, our first study. And then you continually refine that through the pre-feasibility, the feasibility, and the bankable feasibility. So we're moving straight on to the studies. And really that's all about understanding the economics of the project. But what the scoping study we published this week shows us is we would be the lowest cost producer on the planet of rare earths.
When you answer that question of the feasibility study, if it comes back positive, what do you think that does to the valuation of the company versus what it's trading at in the stock exchange now?
The company is trading at a massive discount at the moment, and it's probably got less to do with our economics and more to do with price manipulation of the rare earth whole industry. The Chinese absolutely dominate the market, and they control the pricing. And since we announced this discovery, the price has been very much driven down. At the start of this project, the NdPr price was $120 a kilo. It's now $42 a kilo. No one is making money. Our scoping study shows that we will produce at a cash cost of around $21 a kilo.
So what then is this feasibility study going to add to potential shareholders? Because what I'm looking at here is, where's the upside? I mean, if I buy now, you spend all this money in a feasibility, how do I make money in the process?
Well, I think when the rare earth market turns around, and I think as we continue to institutionalise the shareholder register of the company and tighten that up, potential for grants out of the US government, non-dilutionary money, potential for grants out of the European Union, non-dilutionary money. So I think there's a bunch of exciting stuff, and continual resource upgrades, continual upgrades on the metallurgy and our program, potentially some other acquisitions in the area to grow the project, and ongoing exploration. So very continuous positive news flow.
Well, with all the exploration development companies that I talk to here, they have like an unanswered question. They have something that's kind of keeping them back from growing, and that's what they spend money on, solving or answering that question. Kind of different with the royalty business. So if I ask you that question, what do you tell me? Like, what's the unanswered? Is there an unanswered question for you?
In terms of growing this business? Yes. Well, I think for us, it's in the royalty space. It's such a highly competitive business, and it's hard for us to compete with all the other royalty companies. So we've tended to stay away from the bidding processes, if you will. So if an asset comes out that's available, all the royalty companies kind of get together and they bid on these assets. We've stayed away from that. Big reason is our cost of capital is high. It has been historically, and so we've stayed out of that arena and tended to focus on our core competencies of early stage prospect generation, high quality geological team that allows us to look at different opportunities, maybe at opportunities that other groups simply wouldn't look at, and we can see hidden gems within there. And so I think, you know, that's kind of the thing that I think is that's the part of the business that's tough to do, but it's a part of the business I think we can excel at in finding those hidden gems, if you will.
What do you think this company is worth today? Not what it's trading at in terms of stock price, but what do you think it's going to be worth once you've invested that $21 million?
Well, yeah, that's the unknown. I mean, we don't know those assets today, and so as those assets come, then you can start to try to factor in that growth potential. The only thing I can look at today is the assets that we have. And our two flagship assets, one is Ermitaño. That is our key royalty asset in Mexico. It is cash flowing. It provides us the stability from the royalty revenue, and it keeps the company solid. The other asset is, and we've talked about this before, is the Silicon asset in Nevada, and that is a tremendous asset owned by AngloGold Ashanti. We have a 1% royalty on that. That continues to grow to this day, and so that is the big value driver in the company, and I can see the value coming in that. Where it's going to get to, I don't know, because that asset is still growing. But what we can see today, it puts the company in very solid footing for the future, and there's key catalysts coming. And again, we don't know what those catalysts are, but we expect that the share price should appreciate as that asset grows in value.
Well, on the two projects we're drilling, which is the Peak and the Hit, are we in a RAG system that's got 1 gram plus grades? What we want to see is 100 meters of 1 gram plus. To show that we're in the right kind of system, because we're quite remote, so we need that gram plus to make it economic. Last year we got 50 to 100 meters of half a gram. You know what? While it's a great indicator that we're in the right system, it's not great enough given our remoteness.
What do you think that's going to do to your evaluation? Let's assume, let's be positive here. Let's assume that comes back. You have that 100 meters of a gram. What is that going to do to your evaluation?
Well, it'll send it way higher. I mean, basically...
What is way higher?
Well, Snowline's gone from 20 cents to $6 in 2 years of drilling those REG system. So that's kind of a 30-bagger. I don't expect, if we could pull a couple of holes of 100 meters of a gram plus, we will get 5-bagger, 10-bagger would be my guess. We start trading at $1 in that range if we cut that 100 meters of 1 gram plus in these systems.
Well, Riverside is a generator company, having 14 different projects working in different places, of course, is when are we going to have a discovery and what discoveries? Luckily, we've been able to build up a number of projects with resources, sell them, get income from those. From that income, we therefore continue to have royalty. So this year, will we be able to progress our spin out or progress on the program we have in Ontario? Also, are we having a big discovery with Fortuna Silver and drilling? And how will it go with our copper projects that we have in a portfolio? It's fun to be part of Riverside, multi-commodity, multi-jurisdictional year.
If that strategy is successful, and I'm assuming, like most people here, you think your stock is undervalued, that's why you're out there promoting it. If that's successful, what do you think that's going to make the company worth versus what it's trading at on the stock exchange?
Well, I think it's pretty easy to look at Riverside. We only have a $10 million market cap with $5 million cash. Thus, we have an enterprise value of only $5 million. Just our Ontario portfolio has seen over $8 million spent. With the drill exploration and what we've seen just Ontario, we'd easily see that to be a 5x more. Secondly, our portfolio in Mexico, working on large porphyry copper projects where we worked with Antofagasta, BHP, many partners who have fully funded the work. We've had over $20 million spent on that portfolio, and we own that. So if you look, our enterprise value of only $5 million, you could see that with the drilling and exploration, that could be easily a 5x as well. If you look at our overall program that we're working with Fortuna Silver and discoveries, you look at what happened with Reservoir Minerals, they went from 16 cents, 60 cents, up to over $16 with discovery. We're drilling nice deep holes with Fortuna Silver, and that could definitely make us catapult us to a large high valuation. So we see 3 very good catalysts to go, plus the rest of the portfolio.
There's only one true way to drive value. From the first drill hole to where we are today, it's about building a business. It's not about drilling holes and exciting. Yeah, that's part of exploration. But we always have had our exponential, our alpha return when we actually built the mine. It's a cash flowing business. That's what's going to re-rate us, and we're there after 8 or 9 years of work. The average time, I saw it in one of the presentations today, from first drill hole to production is 17 and a half years. We've done it in 7.
Yeah. Well, you still have to get into production.
Yeah, we're a 12-month build, and let's say we start, and let's just say we're ready to build first quarter of 2025. We'll be in production by the end of that year. So call it 8 years. Still pretty far ahead of that curve.
We've done the exploration work. We're busy essentially demonstrating through this pilot phase that we can mine the material or the resource very easily, and also how we can rehabilitate the land so that rehabilitate the land so people can get back farming. It's a very Malawi is filled with maize farmers, so we have to demonstrate to them that we can rehabilitate the land better than what they're essentially doing at the moment.
What I'm asking about is really a catalyst. Like, what do we think a catalyst could be that causes a re-rate in the stock? Because I assume, like most people here, you think your stock is undervalued. What's going to cause it to go closer to being fairly valued?
Look, Rio Tinto, we have an investment agreement with Rio Tinto. They have an option to become the operator. We don't see Rio Tinto operating mines on behalf of junior companies. So there is, all bets are on the table that there might be a takeover at some point after we've published a definitive feasibility study. So that could very well be, a significant re-rating of the stock.
So the question is, the previous operator didn't do the level of work to understand the ore body. So as they did the ore body and understand that ore body, it's a Red Lake area is very storied, very historical mine for producing mines, high grade, but it's a complex geology. And the only way to understand that complex geology is to drill underground and do that level of drilling. So that's our technical understanding we need to get. And that's why we're putting all the effort and focus in underground drilling.
There's also there's another unanswered question, I suppose, for a lot of people looking at what you guys are doing. They're looking at, this mine has bankrupt a few companies now. Why is it not going to bankrupt this one? So that remains an unanswered question as well. How are you going to answer that question?
So really, the last time, the last management group, they weren't based around technical management. They were early stage explorers, they were promoters, it was a different company. So it's more about the team. A good team can make an asset turn around very quickly. So also a bad management team can destroy an asset. And a couple of groups, team is key, as you probably know, and your viewers will know. And so we've put together a very strong team. We're also taking our time. This asset is ready to go. We could have gone straight back into production. We decided to step back, do the technical work that's required, de-risk the asset before we go back into production.
That previous unanswered question that you told me about, if you answer it, and if you come back with a positive answer, and so the asset is like, Sean, this is good, what do you think that's going to do to the valuation of the company versus what it's valued at right now?
Yeah, so basically, as people will know, as you move closer to production, you get a re-rating. Your P/NAV moves up the curve. So at the moment, when this asset was in production, it was $1 billion market cap of the company. Today we're 150 million Canadian. I believe as we do that de-risking and move closer to production, we will get a re-rating. Maybe not as high as that, but we will get to $400 or $500 million of value as we're in production. And also the last time it was in operation, gold was at $1,300 a gold. We're in a completely gold environment, so we'll be starting up the mine in a different gold environment. So that gives a lot of upside for investors over the short time period, actually, over a 12-month time period.
What's the toughest question people are asking here? I don't even know. I don't typically interview banks, so I don't even know what to ask you. What are people asking? What's a tough question to ask?
Well, it's funny. Most of the people here are asking, when are you going to be open? Because everybody's really dying to be a client, and that's a number we don't know. Beyond that, are you going to be taking care of my money? Are you going to be putting money to work in a safe and secure way? And we are. We have Rick on board. We have a number of other very experienced lenders. I've been in the business for over 40 years, and it's really, we're here to be conservative bankers. And when in banking, if you don't screw it up, it's a really, really great business. But a lot of people they take their eye off the ball. They start doing loans to really industries maybe they don't understand. We're here to take care of that, make sure we have good earnings, because we have to continue to pay great rates to people. But we're focused on a conservative, keep your money institution that you'll be here for a long time.
Toughest question on here, very good question on that. That might be the toughest question right there. So I would say the toughest question we're asked is timing, probably, because we can lay out the premise for why it's a good time to invest in copper, why our projects are good. But the toughest one is always when people ask, how long is it going to take, or when are you going to sell the project? We can't really control that, and there's so many factors on that, and it's an important factor for people to make an investment decision. So really, on a bet like this, on copper, on projects like this, it's really one we feel more comfortable if investors see the value there, they make their investment, and then they're patient and wait for us to get to the end conclusion. We're not a day trading story. We're not something that's a momentum move on this. We're really an end game story. But I'm very confident that both of our projects will likely be acquired by major companies. I can't control when that'll happen.
Oh man, now you're putting me on the spot. To be honest, they haven't been bad ones this year. I had a lot of political questions that came up. So a lot of people asking what my political leanings were, which I find annoying. I don't like.
Who are you voting for?
Exactly. I don't love talking about politics. So that's probably the most annoying is kind of going down that rabbit hole when we're here to talk about mining.
Yeah, to be honest, right now, there are really no tough questions. I mean, in the past, it was always, there was a big hurdle with Argentina as a whole, as a country, and so a lot, historically, obviously over the last 6 months, that's really changed with President Milei coming in. But historically, the tougher questions have always been surrounding the jurisdiction. People didn't feel comfortable investing in a project in Argentina because there was always big government regulations, high taxes, high royalties, etc., foreign exchange restrictions. That's all changed, and so it's taken a huge load off my shoulder. And I'd say, all the questions now are very, very positive. And so President Milei introduced that reform bill. It's actually been passed through Senate now. And so it's officially become enacted as part of law. And so for any new large investments going forward, you receive very favorable tax rates. There's no more export duties, no more foreign exchange restrictions starting from year 3 onwards. So it's excellent. And that's eliminated all the hard questions. So for us, we already have a large deposit. Now, the unanswered question is, well, how much bigger can this get? I mean, we're going to have to wait and see. Obviously, that's a question we can't answer right now. We have to do the work, drill, and then that's a big unanswered question, is how much bigger can this get?
Well, a lot of people want to know why our stock dropped, when we put the news release out. Very encouraging results. In my opinion, it wasn't related to the results. The results are very good. We're seeing a huge alteration system. We're seeing sniffs of gold. We're seeing lots of sulfide in the system. So that's all very encouraging. But I think it's a fickle market. We're still in a very difficult market at this point in time. And, it's good to be here at Rick's Symposium because he reminds people that you do have to be patient, that these stories generally don't play out in the order of months, they play out in the order of years. And, we're working hard, we're doing good technical work, we have a lot of smart people working on the technical aspect of the project, and then we've got a great board with John Black and Doug Silver and myself, experienced geologists that have had success in different types of ways in the industry. So we're doing everything we can to make this the best investment that people can make.
I think there's this misnomer about dilution and that it's so evil. And so, I think what's the right number of shares outstanding? What's the right number of dilution that you have to take? Obviously, less is better, but you have to dilute in order to raise capital. And I would park the dilution question and just say, can you make money off the stock? I don't care if you got 200 million shares or 500 million. Can the share price move accordingly, not being dampened by the shares outstanding? And obviously, in our case, we've seen the share price fluctuate 200 to 500%. So I think it's just the naivety, or I don't want to say ignorance, but that's the only word that comes to mind right now. When people are like, oh, the dilution, you're going to have to dilute. Okay, well, we don't dilute. We don't actually drill. So you can't have it both ways. Pick which one you want. And in our case, we've always taken the dilution, providing that capital is going to be used to create value for the company and its shareholders.
Not sure we've had too many tough questions. I mean, one of the questions we were asked about the porphyry project, and drilling that, is that a good use of shareholders' funds? And we said, well, for juniors drilling 600-700 meters down, that's a bit of a dangerous game. But our porphyry discovery is at surface, or it's near surface. So we're looking at 200-300 meter holes to drill that. And again, it's a disciplined program, so we don't want to draw attention away from a burner. We're going to put maybe 2,000 meters into this. It's on the back of some geological work that's been done by a porphyry expert that came to site 2 months ago. So yeah, that was a potentially difficult question, but I think we feel very comfortable that we've sort of thought through the implications of that, and we're not going to expose our shareholders to drilling deep, dangerous targets.
Why are you valued so high? Or why is your evaluation where it is? And my answer is I disagree. I agree with you. The evaluation is way too low, but I'm working on it.
I mean, everybody talks about metal prices, but we have good metal prices. I think I actually more speak to, I think the market, the generalist market is not paying any attention to gold right now. I said, they pay attention to AI because I don't think anybody really understands what AI is going to actually do for everybody. There's a lot of hype about it, but that's where investor interest is focused on right now. I think we'll eventually get back to basics, and things like cash flow will matter. And
crazy concept, Ray.
Crazy concept, but I think that when we get back to that, that's what I'm looking forward to.
Most annoying question that I had at this conference.
Yes, sir.
An investor asked me if I have a salary.
Okay.
And,
do you?
So my answer to him was, I spend 80 hours away from my family to run this company on a weekly basis. What do you think?
Well, what do I think?
So I'll put it this way. By creating $300 million of value for my shareholders and a 500% return, I believe in paying people who bring you success.
So people are concerned as to why there's been a bifurcation in the metal price versus the equity pricing. And everyone's talking about how is that going to be solved. And of course, that's a free market issue. But it is an interesting situation where we've had the price of gold in particular have a strong move without the gold equities making a move. That's been less the case in the copper space. When the copper price moved, we did see the copper stocks move. But I do believe that this is an interesting phenomenon, and it's going to be quite interesting to see how it pans out over the course of the forthcoming months and years.
Why isn't the share price going up?
Why isn't it?
And you look and you think, oh my God, is it just us? And then you remind yourself that all of the copper equities are not exactly performing in line with copper price appreciation. If the market could perform like that with a correlation coefficient of 1, then it would be fantastic, but it doesn't. And so, the lag response of the copper equities is notable. And am I disappointed? Of course I'm disappointed, as all of our shareholders should be disappointed. But I think that we need to look at why the sector is not moving, and therefore, is this another false start? Maybe that's the fear. It's the worst kept secret that copper is probably going to be the contender for the place where money is going to mostly be apportioned to in this new cycle. So, when that happens, I imagine Hot Chili is going to be the recipient of a very large price increase. And so, yes, I believe that the inherent value is at many multiples of our market capitalisation. And so, Hot Chili has to continue to work to trigger that and to capture that re-rate to firstly move alongside the valuations of our North American counterparties, which are often valued at 2 to 3 times Australian large-scale copper equities, of which now after the removal of Rex Minerals from the Salim Group bid yesterday at a 79% premium. Now there are only 3 copper equities of meaningful size in the Australian market, so that is also starting to become significant for hot chili.
Actually, one guy we were talking about, it was pretty good conversation actually. We have a project called Red Canyon, and the way these Carlin systems form is fluid migrates up, you get ground prep, fluid migrates up the structure, and then almost replaces reactive layers. And we were talking, and I had to explain to him why it doesn't just replace the whole layer, because it doesn't have enough chemical energy. When you have an acidic fluid and it starts chewing up all the carbonate and changing the pH, it loses the acidity, so it can't be chewing out more carbonate material. That was probably the most challenging question to explain. And one question I don't like getting into the details is probably permitting, because it gets quite complex.
Okay.
And it's full of acronyms, and it seems like a black box to people. And
Are you well permitted to finish your plans for this year?
Oh, totally. Like the permits are all in place, and basically when we get our notice of intent, so our notice to proceed into the NEPA process, that starts your 2-year clock under the new regulations that started July 1st. So we should have our notice sometime in August, September. And the only issue is we have an election in the U.S., so that could be one hiccup that we're playing with right now.
Honestly, haven't been asked too many annoying questions. The audience here seems to be very smart. They've done their research. You know, a lot of the people here own a lot of these companies themselves, so they already kind of understand what they're getting into. But yeah, it's been a great conference so far.
Nobody asked you how you deal with door frames? I mean, you're the tallest person at this conference.
Yeah, no, they did. Yeah, no, I haven't gotten any of those questions. I'd say because we have a project in Africa risk comes up quite a bit, and I think it's something that we're very comfortable operating in Africa. Our team has built mines and developed mines in Africa throughout their careers, so I think we get a little bit of an unfair, jaded view because of that Africa deemed risk, and so I think that's something I'm always batting away, because Tanzania is a phenomenal place to work. It's a great country. They've got a great president who supports our project. So Africa risk is probably the one.
Well, people always like to ask me, since I'm Mexican and there's now too many Netflix shows, they like to ask me about the cartels, right? That's the favorite question they ask. And the way I always answer the question is, our priority is the community, right? And as long as you have the community, and just repeating myself, having all the women on your side and taking care of the children, the way the cartel operates are irrelevant, right? They let us work because they know we're bringing a lot of good things to the community, right? So that's usually the question that I've been asked as a Mexican, and I would say Mexico is a great place to do business. It's tough, but at the end, I don't think there's that many opportunities, and there's not too many countries which are neighbors with the US, which is the largest economy in the world. And as we've been listening here, copper is needed, and the only neighbor country that has the ability to supply the US is Mexico. So with the goods and bads, I think Mexico is a great place to do business, and for all, security has never been an issue. We have always operated in country.
Probably, do you actually want to build this project? I find that question a little bit annoying, because the answer is, in my career, I recognise how hard it is to find projects of this quality. And when you find them, yes, you definitely want to build it. And so I don't let it show, but I certainly get annoyed when people ask me, do I really want to build this project? The answer is yes, absolutely. This is the perfect time to be bringing a new copper project into production, and certainly one that's as unique as this one is something that I'm not going to let go too easily.
I think the most common risk is they always say, look, dilution, how do you raise capital? We've done something a little bit different to what we can say comparative from the TSX. We've always focused very early on long-only money. So we started off with a share registry that was almost 100% retail. in over 2.5 years of capital raise. We now have a share registry which is over 65% of high net worth, long only funds. So capital risk is not a problem for me. We always can raise money, but with the right people.
Really, I suppose people worry a lot about our cash position and are we about to raise money? And that's been a constant thing. But we have successfully, since the acquisition of this project, we raised when we acquired the project, we were at $0.01. We raised at 12.5 cents, and there's been no raise since then. So we believe that there are other sources of funding and that are not so dilutionary as a capital raise, and so that's what we're pursuing.
Well, I think a lot of people look at us and they say, well, what can go wrong? I mean, that is a question, and it's a very valid question, especially being a single asset royalty company, a single asset cash flowing entity. We could have in a situation where the mine shuts down, there's some political issue where suddenly our royalty revenue is cut off. And that is a very valid point. It happens. We've seen it in other companies in the past, but a lot of them have other assets. So that is one risk that we have. And yeah, it's uncomfortable, and we understand that. So that's why we're trying to find assets to be accretive to what we do that can provide that future cash flow. We're not going to overspend to get that, but they're hard to find. And so our game is a patient game. The assets that we buy aren't always going to be head-turning transactions overnight. They're going to be accretive and grow within the company, and hopefully one day they come on into being just like Ermitaño did.
Well, it's a high-risk property. High risk, high reward. I mean, that's basically, I started out in this industry as a professional gambler, so I understand risk-reward well, and that's still my focus.
We got to do a podcast on your story one day, because I think it's quite... When did you get into the Yukon first?
I moved to the Yukon in 1975.
Okay, so that was about 20 years before I was born.
Yeah. It was about 20 years after I was born.
So I think one of the key questions is about Mexico and the Mexican president and what's happening in Mexico going to happen in the future. In early October, the new president will take over in Mexico. For us, one of the key things is Riverside, over the last 5 years, has diversified more than half of our business beyond Mexico. We used to be just Mexico as a focus, but we've diversified as a generator company into working both in Ontario and in British Columbia. With the question of Mexico, we'll see what happens with the new president, Claudia Sheinbaum. The most difficult thing is for me to know what she's going to do. No one knows what she's going to do, and come October, then we'll start to hear. Currently, there's a lot of discussion of different topics, so it's interesting because it's all speculation. So I'm really looking forward to progressing in that, and for us, we're glad to move ahead. We have titles, permits, and we've been moving forward in exploration and been able to develop projects independent of what's happened in the Mexican politics over the last 6 years and over the last 16 years.
I'm not going to say tough questions. We don't have tough questions. We're miners. We have been, I told you in Mexico, it's 1 in 10,000 projects, that's our number, that actually make a discovery and build a mine. That's our number, and that's some very smart people. Some of those institutional investors, that's their number too. So we've been serial in 27 years. We've built 3, sold another 3 to majors, and now we have taken this to the point where it's going to be built. So there's no tough question. The tough question they should ask is, have you ever built a mine? Yes. Are you going to build this one? Yes. Track record to do it. The one that's aggravating is, are you going to sell the company? Guys, like everyone here asks that question. That's not a business model. That's hope. No miner should set out that I'm going to drill some holes and sell this to somebody, because you don't control other people's boardrooms. The only boardroom that matters to me is mine, because we make decisions for our company. You shouldn't ask a question, are you going to sell it? We've done it 3 times built, 3 times sold the company. But you don't set out to sell it. It just happens. So that's the most annoying question. Think you'll sell it? No. That's not a business plan. A business plan is to build a mine.
People want to know what the big risks are, why the project wouldn't be a success. We are quite fortunate in that this ticks almost all of the boxes that you can have in a mining project. So it's difficult. It's a difficult question to answer. Very often there's some significant risks or key risks that's easily identifiable, and we don't have many, which is quite in a nice position to be in.
It's more around, not around the risk, but it's more as people say, are still a bit skeptical. You know, it has been there. So a lot of people, there's a lot of explaining our story, how we're going to do it different. You know, in the market, we're finding that we're not getting, let's just say, we're not getting the love of the market yet. People are skeptical. It's a watch and see story. You know, they want to see us de-risk. They want to see us move forward. That's really where most people are at the moment. They want to watch us and show that we're de-risking. It'll be on us to prove them wrong.
All right, so that's what is it actually? Why do I start recording an outro without even knowing how many companies that was? I'm gonna go ahead and guess that it's 25. I counted it the day we left. Anyways, I think it was 25 of Rick Roll's stocks, maybe 26 because John Black is Aldebaran and Regulus. But that's it. That's this is the last one of my what do you call it? Reports. You know what? My report, my card, my entry. What do you call my badge? My badge for the Rule Symposium on Natural Resource Investing said media. It said my name on there, and it said reporter. And it kind of made me feel real for a moment there. It almost makes this feel like a real job, almost though. But that's it. 25 or 26 of Rick Rule's stocks, companies that he's vetted personally that I talked to. What did I miss to ask them though? Tell me, let me know. Send me an email. It is antonio@resourcetalks.com, or put it in the comments below, whatever works for you, or send me a telegram or a pigeon or whatever you can, whatever you use, whatever kids use these days. Got to remain cool, of course, with the trends and whatnot. So let me know what you thought. Let me know which of these companies you'd like me to do a longer sit down with. Many of them I have already interviewed, so you can go to the channel, which obviously you should subscribe to, and you should click the bell icon so that you're notified whenever new interviews come out. But you should also just go to the channel, go to playlists. You're going to see a playlist called CEO Barbecue. All the interviews we do are going to be on there. You can also listen to it on YouTube Music, which is a podcasting app where you don't have to have your phone on all the time. You don't have to actually look at my face, which definitely saves you from a lot of bad things. Anyways, that's it. Thank you so much for sticking through this. You're a unique person if you actually did stick through this whole thing. I really appreciate it. And let me know what else I should do. What companies should I talk to? Any ideas, whatever you might have, whatever's on your mind. I appreciate any and all kind of feedback. I'm still trying to learn whatever's happening in this space. So any and all feedback is mucho apreciado. So yes, thank you so much for watching or listening. And hopefully you're going to be watching some of the next videos. All right. Thank you so much.